Okay. Hey, hello. Hello, I'm starting again. Good afternoon, Argo. Hi, Bernie. Good afternoon. Hi, Bridge. I think it's good evening, your time. Hi, Chris. Great to have you here, Christoph. Hello. And hi, Frank. Great to have you here. James, welcome. KS, hi, welcome. I think you are from Mexico, but I must admit I forgot your first name. I'm sorry for that. Apologize. That was Tang, I think. And Levi, good afternoon. It's, I think, 4 p.m. in Israel. Myron, great to have you here. I can only say, if you understand it, Dobar dan u Norvešku. I've sent you an email, Myron, by the way. Hi, Phil. Ramo, welcome. Robert, hi. Srini, welcome. Sebastian, as always, hello, hello. Tom and Julas, welcome back. And Eve, hello to Belgium here. Great to have you here. Dobar dan i hvala. Odlično. Now we can talk different languages here as well. So we are an international group and it's great to have you here. What do we want to do today? Let's check recording is on. Yes, recording is on. And yes, the bridge from Hong Kong. I think she understands Chinese. Yes, good morning and welcome to our last day today. But stay tuned. I have a wonderful offer for you, and that's the beauty of this offer is I'm sure you will accept it because it's for free and it's simply exciting. I would like to first of all, we will in few minutes talk about the markets first. We almost did the theory and went through the documentation, which you should take as a kind of wiki for yourself. I've tried to cut off as much as I can from my previous seminar, which was held 2 years ago, I think. And I just wanted to keep it short and short and crisp. In this case, therefore, I've cut everything off the documentation. That's the first part. The second part is a little bit more uncomfortable, at least for myself. I sent you an email, and by the way, Ed, I'm getting every time I'm sending emails a bounce from you. But I suppose you received my last email, which I sent a few hours ago. With the content of the link, with the content of the video or Vimeo or video link with a password. Then I have updated the documentation. There is a link in the documentation. Okay, good. Ed. There's a link to the new documentation, which has the version 11.18 2021. Yes, that's important. And then I must apologize because I mixed something up. And Frank, thank you for that. Really, I appreciate that you have had a closer look into it because I mixed up the sweeps. We talked about the sweeps 2 days ago, and I mixed up something which is really a little bit more unpleasant right now for myself. When you see my screen, I hope everyone can see my screen here as well. And so far I know the sound is coming good. Okay, good. Everyone can see my screen. So we talked, I discussed with you, we discussed the sweeps and what is the reason for sweeps and so on. And I mentioned that there is an A in the sweep and a P in the sweep. You remember that? And I apologize for this inconvenience and this what I said. I corrected that at page 50 in the documentation immediately. I've make it sure with developers that I see it now right. So there's one guy who is selling 3,000 3,000 contracts. And he is selling actively, that means market 1,446, and he is selling 1,554 contracts passively, that means on the resting limit side. So he is short 3,000 contracts and not only 1,448. Thank you, Frank. That's really good. So I must admit I'm a little bit embarrassed because that was a glitch which must not happen. What must not happen? So I'm just yes. As I said, I'm embarrassed because this must not happen. But I have corrected it immediately on page 50, and I sent you an email that we have to see the sweeps. This way that 3,000 or 2,000 or 1,500 or what number is in this flag on TradeFinder. If you are using TradeFinder, that means he traded 3,000 contracts, but on two different ways. That means actively and passively. So that's quite important. I've changed the documentation, and please delete the previous versions. It might be that I will add a little bit more to the documentation as well. So keep your documentation or the documentation of this seminar up to date. Was he able to sell the P orders? Srini, you can please use your microphones, guys. Please use your microphones as always. Don't be shy.
Walter, good morning. Good morning. The clarification is, that 1,554, was it done? Or is he still trying to get?
No. He did. He wants to have 3,000 contracts, and it's not easy. Like maybe if you're trading the SPX, the cash market, where you really can sell 500 millions of shares or contracts, but it's not easy to get the 3,000 immediately. So he has two ways. Sometimes you will only see the 3,000 actively. That means if you don't see A and P, that means he got it in a row. But if you say in A and AP, there have been two different trades. He got 3,000. He wanted 3,000. He got 3,000 by an active market order and a passive limit order. So he is finished with 3,000.
Oh, perfect. Okay.
Okay. Great. And
Walter?
Yes.
This is Robert. I just want to ask then, so if you have a sweep where you both have the active and the passive, there will be then another flag coming up for showing the hidden order as well. So you'll have the sweep flag, and as the passive order, which is normally done by an iceberg, if that is then executed, you will have a separate flag indicating that that iceberg, because we saw in that example that you gave, there was an iceberg with the same amount reflected in the flag sweep as well. Is that correct? Yeah.
If I got you right, there might be there are also two differences. You can see an iceberg here, but you must not see an iceberg here in order to get this number he wanted or he wanted to trade here. I'm not sure if I understood you right because the sound was a little bit off here.
Yeah, no. I think you did understood me correctly. So it is just if you have a hidden order or an iceberg setting that is then a threshold, and that threshold is also met within the sweep. If there is a need for him to accumulate on an iceberg order, then you'll have the flag. You'll have the active and the passive in the flag, but you also then have a flag for the iceberg if it triggers your settings in terms of your volume for your hidden order.
Yes, exactly.
Okay. The hidden order flag is a part of the sweep.
Yes, this hidden order flag is the part of the sweep, so that belongs together here. If we see that this is the complete trade. The result is he must get 3,000, and to complete this he do as I mentioned, he must do 2 trades, active and passively. Active and passive. If the algo is able to get 3,000 in a row, then you won't see this passive Phil, tell me if I'm right, but if he is able to get 1,000, 2,000 or 3,000 in a row here market, then we won't see a P here.
And also important it is he got not the sweep with 10 ticks. Maybe he need 12 or 13 ticks. So
okay.
when he do this with the passive side, he get a better price per tick.
Yes, right. Thank you. So these are my team colleagues, Philip and Bernie here. Great to have you here, guys, just to help me out here out of this really embarrassing situation right now. But now, guys, I have something really exciting for you. I think we are almost, not everyone is on board today, but that will be on tape on the recordings as well. Thank you, Chris, for the idea, by the way. Thank you, Chris, for the idea. So, as you know, my intention is not to selling seminars, and my intention was or is maybe this last seminar I would like to give and to do, and therefore I'm a little bit so reluctant with seminars. I'm really not. I don't need to sell my knowledge or to earn money by selling seminars or even taking money for running trading room. So I would like to do following. I would like to do a trading week in December from 13th to 17th of December with you as all seminar members. So what my idea is, which came up during the last hours, is why not to do a pure trading week. This year, of course, in December the 13th until the 17th. That means that would give us the chance to go more into the depth of daily trading, because my concern, everything with every seminar is that we need to get everyone on board here with at least similar or same knowledge. By that, I know from my day from our trading room that once I'm placing a trade, immediately in the same second, the why question came up or comes up, and then you are totally, or at least I'm totally distracted. I'm totally distracted by answering, and then the next is coming up and saying, oh, that's a value area high, and that's a value area low, and that's a POC, and you see we have here a double distribution or single distribution. Oh, I see a V delta in the footprint, and that chatter goes on then. And the point is, it is extremely distracting. You have to focus on your trade. You want to manage your trade, and the stress is quite high at the moment. And therefore, my idea was to do this 4-day seminar, and I wanted to start yesterday with live trading. Let's see if we can do something today together and showing what I'm doing. But I would like to invite you to be around with us on December the 13th until Friday. I think it's the 17th. So that would be the week before we all go on holiday. So I hope so, at least the Europeans want. So in Europe, US and Europe. And then I will take a long break until end of January. But that would be a nice closure of this year, or close of this year for this group. And by the way, I'm chased to do another seminar in German in 3 weeks, 2.5 to 3 weeks. And I would like to invite also the German traders. I don't know how much, but how many will be there, but it doesn't matter. So that we will be a quite nice group here during this live trading week. And my idea is that we would start at 9 a.m. Eastern Time, 9 a.m. Eastern Time, and we will have time until 12 p.m., maybe 1 p.m. Eastern Time, only 3 or 4 hours every day, 5 days. And what I want to do then, I'm using my trading style, or that what I'm here, what I'm showing, what I try to conduct, what I try to teach, and show you what I'm doing here with with Bookmap, Trade Finder, and the indices we talked about yesterday with the volatility indexes, for example. And that would be enough time as well to discuss maybe long-term trades or even short-term trades. You know, we have good opportunity when we see that the market is trending to go long or to jump on board and then hopefully get 10 points back, watching where liquidity is, where the institutional levels are, and so on. But also we have sometimes quite nice scalping opportunities based on sweeps or even based on the volume spikes, when we see really strong volume spikes either in the Market Volume Pro and as well in parallel with the Trade Finder when the volume spikes flag comes up then. Okay, that would be that is my offer to you. It's free. It's without costs. It's just having fun a week together and learning hopefully a lot about trading and what I can show you. Maybe you have your own ideas, but I don't want to start again and explain what is a sweep, what is a volume spike, what is that, and so on. That would be great if you would join or can join us in this week. So please, I will send a mail with all the updates of the links. I have to buy of the links and the video links, the passwords, and as well the updated documentation. And I would like to invite you to be with us here on December from 13th to I think it's 17th. These are 5 days, starting at 9 and ending at 12, latest 1 p.m. Eastern Time. Yes, that would be great. So join us, and that's a really good offer to be with you. You know, it's not everything something about money, but also with the community and having fun and understanding and learning. That would be great. Okay, guys. Any questions? Yeah, great Christmas present. Yeah, okay. Yeah, it's a good Christmas present. Great. Good. What do we want to do today? I promised you yesterday. I was a little bit under pressure yesterday because I have had an important appointment. I couldn't slip that. Or excuse me, or change that. Now today I would like to start first with the market overview. When I see my Bookmap screen here. Okay, the institutional levels are there. Now, first starting to analyzing what I do beforehand, when the market starts. I'm analyzing the daily levels, the simple levels based on, I have NinjaTrader, as you know, so I'm using only NinjaTrader and only Lizard indicators from Lizard Trader. And that's everything I have. I don't have nothing special. Of course, the Superdome, and what else? I don't have anything else. I have Jigsaw Trader, of course, installed, but I don't use it. So I'm very clean. There's NinjaTrader, Lizard Traders indicator, most or all of them, and that's all what I need here for my trading. The daily levels are simply the annotation of highs and lows and the settlements. Where was the close? The close was yesterday at 86, so we should look if the market is trending to the downside to see if they want to close the 86, 46, 87, 6 and 87 level. If you are not sure where to see the levels, the settlements, then go to, just give me a second, go to CME page and Wednesday, yesterday, then the trade day yesterday, Wednesday, and the settlement was 86.25. That's what I'm saying. It's a gap or close. Yesterday the settlement was 86.25, and most of the time when the market is in a sound state, then they are going to close the gap. Oh yeah, they're starting right now, and then with a huge gap, spike here, of course. Oh, come on. And that's all. So on in the institutional levels here, what I have is are those institutional levels. They are based on options on algos this big institution is using, and I'm sure they are crossed along, or they're connected along the world, all these big institutions, and they trading against them, on with them, whatever. So that's my assumption. I don't have insights. I'm not selling them. I'm not promoting them. I'm not the owner of the institutional levels. I'm just sharing them. So you get them for free if you want. If you subscribe to Spot Gamma, and by the way, Bridge, I promise you to set up your Bookmap. I need Bridge. Not sure where we are, but I just wanted ask you to install TeamViewer and give me the ID and password, so to help you out with the installation there. By the way, excuse me here, market started, we are a little bit late here, but anyway, I must say that for every one of you, if you are interested to get a help from us and a helping hand to set up your Bookmap, I have a TeamViewer business license for TeamViewer, and therefore I'm using TeamViewer as a remote access program. That means if you are installing the client on your side, it's free, of course, then it gives you an ID and a password, and with the ID and password I can really easily and very fast set up everything on your chart what you need for your daily trading. If you want to do that, want me to have to adjust you or to set up your Bookmap, you need the TeamViewer. So ask me. It's easy. It's really easy to set everything up very fast. There's nothing really complicated. Okay, that was the TeamViewer, and then this is the institutional levels. I'm posting them in the room on Discord and as well on Twitter. That means you, if you are in Discord room, you will see them for free, and as well on Twitter. On Twitter, I'm not posting every single level, but an excerpt of these levels here. And I'm using Spot Gamma, but mostly these levels are coming together with the Spot Gamma levels as well. So it's a little bit, simply that's what I'm using here, and I'm really obeying them because this is absolutely amazing to see how they're working and how they work. If you want to do so, watch them, and you will be amazed what information we can have based on them. Good. That was that. Okay, so I think you have noted we will do a trading week in December 13th to 17th. That's I'm explained my levels here, my columns in Bookmap. We talked about the DOM intensively. Now let's have a look what I'm looking at, or what I'm looking when the market starts to trade. So a little bit uncomfortable right now is to have several charts on one screen. I think you see my Bookmap, and I hope you will see my volatility indices we talked about yesterday. Okay, no, nothing, everything is fine so far. Recording is on, and that's okay. So we have had the first sell off here as well. UV bounced up. The point is I missed right now the down move. You see that very nicely in the UVXY and as well in the SPY. Let me just show you the SPY here. Yes, that's the SPY. I'm sure. Let me have a look at the NQ in the NQ Nasdaq. We have a very nice 160,000 iceberg at the beginning in the SPY, and then the SPY broke down. That might be the first trade for you when you know, when you see what the market is doing. With this green, let me see the ADD. With this green bars on, what is the meaning? If they're going up. If volatility is if volatility rises, what does it mean for the ES in this case? If the SPY is drop, sorry,
It'll drop.
yeah. So therefore, we talked yesterday about this detox week, guys. I know some of you are maybe not convinced about that. Anyway, just try to keep this chart and the bookmap chart on your screen or your screens, and that's everything. Disobey any other indicators at least for 5 days. Try it. It might.
Walter, I was watching that indicators yesterday, but it seems to me that it's not very valid for the Nasdaq, because yesterday Nasdaq was the strongest market.
Yes.
The VIX was saying something else.
Yes. That
for the ES, for the Nasdaq, it's not a.
Yes. Yes, you're right, Yves. You are right, totally right. I have to add the QQQ for the Nasdaq as well, and the QQQ has what's the name? FQQ and TQQ for as their volatility shares in 8 ETFs. Yes, you're right. So you can if you're watching Nasdaq. So a lot, Myron and you and maybe others are trading Nasdaq. Let me see Nasdaq here. You should have you should have the addition of the QQQ here and on your chart. Let me show you that here. Where's my QQQ? So for example here, no, that's the CB and Q is here.
So you are keeping all these quotes for 1 week open, because then
Yes.
it's putting
Yes.
resources on your computer. No, that's
But I don't care, because that's the problem of my computer, not mine.
What?
That's the problem of my PC, not my problem.
No,
I'm keeping 6 or 7 days of quotes on my PC. I have a historical data which goes back to 5 or 6 or 7 days. That's the maximum. I think 90 days is the maximum. No, excuse me, 90 hours. Oh no, so what do I have? 90? I think 5 days, 6, 7, or 8 days, 9 days. I don't know. I'm keeping at least 5 days on my chart here. Yes, you're right. Yeah.
Okay, and then if you want to do the replay feature in Bookmap, is it then possible to go, if you have, let's say a complete trading week of data? Is it then possible to go to a specific date and time? Or
Yes, it is. It takes time, because that all this must be loaded. The point what I'm doing here is, if you are going to record, I'm recording right now. I'm started to record every single day separately. That means for all my instruments. So I'm starting at 10 o'clock my time and ending it at 10 o'clock in the evening.
Okay, so your files are smaller.
Yeah, the files are smaller, of course. I'm not recording that the whole week. That's not necessary.
Yeah.
And
Okay, now then, because I was doing the whole week.
Okay.
And then of course it gets too impressive.
No. That would be too much. So I'm only interested in
The
day,
Yeah.
and then I'm recording the day for all instruments I have. This is several
And you
instruments.
start with the European session and end with the US session, or
Sorry?
you start with the European session and end
European
with
session,
the
yes. I start at roughly 9, 10. See what happens. Mostly there's as well a very nice thesis about why the market is trending between 9 and 12 European time. So I'm talking about the European time, and then it slows down from noon. That means 12 to 30 European time, when some announcements hits the market, and then it started again at 3:30 or 9:30 Eastern time. So
okay, thank you.
Yeah, that's so if you want to watch the the NQ, then you need a QQQ. You need some other ETFs which are NQ related to get a similar picture like I propose here for the ES. Myron, I will. So I haven't had the time. I haven't had the time to put them on here on my charts here. How can one use divergences? Divergences are on every chart the same. Let's see if we see some if we can spot some divergences here. So I'm switching back from NQ. If you are totally right, if you watch that for the NQ, you should change the instruments, of course, and as well Myron, and then who else? I think Ramo as well is trading NQ, and it doesn't matter who else is.
Walter, one last NQ question.
Yeah.
You said so just to clarify, ES, I'm just comparing ES, the correlation is with SPY or SPX, and now NQ you're saying QQQ. That's correct. But
Yes.
you're saying, but ES, the inverse correlation is with the VIX.
Yes.
But what are you saying? NQ has an inverse correlation with what? FQQ?
No. It's not an inverse correlation to the QQQ. Maybe you should use the FQQ and TQQ as well for NQ. I'm not sure, and if commented that right now that the VIX is not working, not necessarily working with come on.
AQ,
yes.
Yeah, it is
SQQ,
not.
I think it was Myron, FQQ and TQQ and SQQ. Oh gosh, that must be a little bit more. We should investigate a little bit more in those instruments and see how they are working. You are looking for a VIX for NQ, right?
Yeah, I was actually, VIX, ES, perfect, match in the sense, one way or other way. But VIX and NQ, as I said, it's not. And one last question on the same. In your previous seminar, you used to use yen. Just can you shed some light on that? Are you not using yen anymore?
Excuse me, what?
Japanese yen?
Yes, yeah, I'm using it still. I'm still using it. It was extremely, I'm using the treasuries as well, and I'm using the US dollar yen. It worked fantastic until, 2020 or something like that, 19 or 20. It worked fantastic because the big hedge funds simply shifted. If the ES or the SPX was vulnerable to trade down or to trade off, then they are shifting their money into the US dollar yen and as well into the treasuries. So there have been a very nice correlation. I think it was 1819, not sure about 2020, and then suddenly this nice correlation where I was relying on stopped at 2020, especially 2021. There was no significant correlation between US dollar yen, and if it rose, then we expected 2-3 years ago that ES must be or will most probably trade lower or trade down or go against the yen. That was the inverse correlation. I'm still watching it, but I'm really a little bit more cautious about what I see right now or what happens right now. I'm still watching the treasuries, because if the treasuries are high or were high, the indices are down or went down. So that was really reliable the last years, but not it. Suddenly it stopped. 2020, I think it was 2020, 2021, somewhere. Then it stopped. It was not so reliable. But if you are interested, watch the US dollar yen, because it was used for the big funds to hedge, and watch as well. And treasuries, of course. Yes, of course, the treasuries. So that would be a nice correlations too. But as mentioned, I was convinced because it worked a while, and then suddenly this correlation, yes, was cut for what reasons ever. I don't know, but it's not. You can't today say with very high probability to say, okay, if the US dollar yen is rising, then we should expect the ES falling. That's, from my point of view, not possible.
Well, we have a nice little downtrend in the ES. Where would you look to re-enter the short at?
Give me a second. We have a very nice, just a moment.
I've taken 3 trades already, all winners, shorts. But I'm just curious where you would have entered and exited.
Give me a second to. You have been short. You mentioned you have been short.
Yes, I took 3 shorts already.
Okay, yeah, you're a good man. So you have the power to concentrate. So let's see what happens. At the moment, I lost myself. You see the VIXs are falling right now. So the ES is most probably to trade maybe against 46.98. Give me a second here. 46.98. I will draw this price alerts into. 46. There was I don't know what this is here.
The ES just broke above mid and VWAP.
Yeah, it's
buying
above
right
VWAP.
now.
Yeah, it's about VWAP. Wait, I'm just waiting right now. I think this might be the next point, the next target here, because we see liquidity. So
So when you see something going up like this with strong buying, you wait for a pullback to buy, and where would you look to buy at?
no, I'm just watching what happens. I'm watching for the levels where the market is trending at. Maybe for high volume levels. I'm sorry for that. I think it was Euler.
Okay, so you don't wait for a strong move and then try to buy the pullback in the trend.
Normally yes, but give me some time to just to synchronize myself with the chart here, because of yes, I'm answering the questions. I'm not concentrating, not focused on that what happens here. Give us some minutes and time to understand what the market is doing right now. I don't see anything really serious where I would like to put my trade on. I missed this long was quite nice here. You see, based on the price dynamics, we have a kind of exhaustion here at 95. The question is, where is the market heading? What is the direction of the market right now? Let me just to focus on that, what the market is doing. So, Myron, we should discuss it a little bit later.
ES looks to me like it didn't go up on high volume. It's just people removed their sell limits above, and so that's why it bounced real quick.
I wouldn't wonder if they are going to hit 98 here. Just wait. Well, let's see what happens in the correlated. Can I give me a second? Can I? Always on top here. Okay, that's what I have. So I'm just squeezing my screen here with two charts. At the moment, I don't anything here what to do here. We see a nice based on the MVP. drop in the market volume here, but that's not an, you see as well 97 is coming up here.
Looking to buy 93.50.
The ADD, by the way, is negative 278, constantly dropping, starting from 609, from 600 now, right now minus 315. Then the tick is down as well. I don't see any reason to buy 50 from my point of view. WIX is rising, WIX is rising. SPY is not following. $97.25 is still in, interestingly, you see that. So I don't see any reason to buy 50 here, and I suppose you are stopped right now here at because I see that here. Come on. Because we see constantly selling here. You see the price dynamics is showing selling. That's a volume spike, a small volume spike, which means this was a high volume traded right now here. I don't see any really good entry opportunity for myself here. So I'm just waiting. SPY is down, VIX is up, HYG is down. That was the spot gamma level here at 95, and the institution level was indicated in 95 even, 95.75 and 95 even. Now buyings come, a little bit more buying comes in here. Still ADD dropping, a tick is still negative. There's no chance to buy anything of this stuff here.
Walter, sorry, what's your sweep setting?
Let me have a look here. 600. What do you have?
I have 300.
Yeah, okay.
At your level, you don't actually enter until you see your price dynamics turn red or green, right?
Yeah.
So when you reload the indicator, Walter, you can see a very nice sweep at the top.
Okay, let's, yeah, good. Settlement is 986.
I have a question about your price dynamics. Is it 50% market orders and 50% what's going on in the limit order book?
I don't believe that this we can do the math because you mean 50% and 50%. Did I understand?
Well, I know you weight the limit order book and the market buying and selling, but is it mostly market orders or is it 50-50?
No. It's I don't believe that is coded that way because it is simply what is transacted on the limit in between market and limit, and yes, but what is transacted between market and limit. This is not weight put on. So far I know, I'm not sure, I have to ask the developers. So far I know there's no weight put on the price dynamics plot. But if you have a good idea how to improve that, write to support, write to the devs, and they maybe should implement that. Yes, I see that now, Bernie. I think you talked about this 195.
So, yes, I mean this one.
Mm-hmm. Good. So I didn't see any. I missed that one, but anyway, it's now hindsight. We see the institution level, but I think it's the gap and settlement as well here. Yesterday VPOC. Yesterday value area low. These are numbers added by Chuck. This from our Discord room. I think because we can't. Yeah, I think there's an institution level as well here. The close at 86. Let's see if the market is able to trade into 86, and we have a nice liquidity at 97. So that might be a nice try to go long here. Maybe that's could be a sweet spot. I'm watching that. Although, guys, keep in mind we have ADDs minus 600 and 700 right now, and the tick is still down. So that means this market is more vulnerable to the downside than to the upside. And watch live what happens in the SPY. As long as the SPY does not recover, or we see any divergences on the volatility indexes as well as high yield bonds here, there's no chance to buy at the moment.
Walter, I'm curious if in the SPY you look at 50 cent and the 0.0 levels as support resistance, because that's where big option guys have contracts.
Yeah. What you see, what you can spot here as well, this is a nice divergence as well here. You see this high volume spike. This is a high volume spike here as well in the MVP. We called it, the MVP was developed, I don't know, 3 years ago with Bookmap together when Bookmap was not so, this didn't provide many API functions, and that they call it stop run signal, or we call it here MVP, and that's very, very similar to that. So what I'm watching is the nice move into this 86 to close the gap. Didn't happen. That was my idea, to buy 86. If we are talking about divergences, I'm not sure if everyone understands what a divergence is. That's a very nice one here. That's a very nice one. So you see high volume traded here where my cursor is, and then they retested the area. My idea was to buy 86.50 or 86. That would be the sweet spot for myself. And they built a divergence here between the first touchdown and the second touchdown here. In parallel, the price dynamics is up, and the volatility is yes, it's coming down as well. Let's see what they are doing now. I need a reason. I need a reason from the market, and don't see. I have to be very, very focused to see the reason, to understand what the market is doing. But right now, I don't know whether I go to short or go long. That's nothing for myself. So I'm simply waiting and seeing if the market is offering something what I could take. the best idea was to see if they are going to close the gap, to see liquidity there. But as well at 1897 liquidity was cancelled. There was spot gamma level as well, and yes, institutional level as well. Nice buy sweep.
I just shorted that retracement up to 91.
Good.
Got my other stupid loss back, but I saw that big move up, and I figured on the little pullback, shorts would be covering and likely to cover, and so that's the kind of stuff I get myself into trouble.
Okay.
See a strong move, and then I try to buy a pullback.
Yeah, but I understand. I think I know what you think, what you are meaning, but what you're talking about. When I look on my charts here, I see the VIX is up, the SPY is down, the ADD is down, the tick is down, so I don't dare to buy this. So I'm looking for sells, and to see nice liquidity or decent liquidity somewhere here.
Did you just say the VIX is down?
Yes, the VIX. I'm not sure.
Well, when that falls, doesn't the ES go up?
No, excuse me. VIX is up. VIX is up. Sorry, the SPY is down.
Okay.
The SPY is down.
Gotcha. Okay.
I'm not sure. Do you see my screen here? I have two charts on my screen.
I do.
Okay, good.
I do. Good. Can you just real quickly tell me from top down what the symbols are? I'm going to write it down.
This is the SPY. This is the VIX 1 minute. This is the VXX. This is the ETF. The UVXY, the ETN or the stock. And the HYG, which is the high yield bond. It makes sense to measure or to put on the chart.
So when the bonds fall, that means interest rates go up, which makes the market go down. Is that right?
Yeah.
Okay. So that's correlated directly with the market direction.
Yes.
Okay. I see why you use it. That's great. Wonderful. Thank you.
And on the other chart, I just want to. I don't have the space here with my screen here. I have the ADD, the tick. Now the market is most probably going up here, and the SPX 5 minute and as well VIX 5 minute. So VIX is starting to drop. That means the market is most probably trading into. It's really hard to say. It's simply choppy. It's simply sideways. You can take blindly here in long position, but it's really hard. It's really hard if this stuff is coming against you. We have a clear target at 97. The first target, I would say, is the 97 level. The question is where to enter. Where to enter here? I don't know. So therefore, if I don't know, I don't want to as well be in pressure here because of the seminar to do something. But I'm very honest with you. I don't know what to do here. I don't have any idea, and therefore I'm not trading at the moment. The first.
Hello, Walter.
Yes. Hey, Raimo.
Well, hi. I just wanted to tell to Chris, because he just mentioned that he had a loss somewhere when he was doing counter trade. And I know it's detox week, but one indicator that I use a lot and is giving very good signals in combination with Bookmap is the RSI. Because you have, for example, at the open today, on the 1 minute, you had a result situation where the price was running to, and I'm trading NQ as you know, to a high liquidity area, and it bounced from the high liquidity area, and the RSI was at that moment, I think, 14 or so.
Oh, great!
So very, So that's a clear buy.
Yeah,
and then it went up, and it got to the RSA 80, and also into high liquidity, and that's the area where I want to take profits. So that is perhaps one indicator if you want to day trade that is giving very good signals in combination with Bookmap.
Great, but you have the RSIs on your what do you have, NinjaTrader or what do you?
I have NinjaTrader. Yeah, I can share a screenshot if you like.
Yeah.
Okay, I will a screenshot, and I also have one indicator that's proprietary, but I will
What's that indicator?
with you so you can see what I mean.
Yeah, I mean, you can share it in the chat or put your chart in the chat. Okay.
Yeah, I will do that. Okay,
Yeah.
thank you.
Okay, now what we see is SPY is rising. We have still a negative sentiment at the moment. It's minus 770. ADD tick is still down, so that's simply nothing really enthusiastic in this market right now at the moment. Let me see the other institutional levels just to add them. 82. Therefore, I just don't want to be in the pressure here with trading. I mean, the pressure is high, but I would like to try to be very calm on trading and to do my style, and to try and to explain what I'm doing. And at the moment, as I said, that's nothing I would prefer as a trade. What happens here is a sweep and sell sweep, and there's still pressure to the downside. You can counter all this stuff here, all the sweeps, and if you are lucky, it goes up to your direction.
Hey Walter, you're following the ADD for market internals, right?
Yes.
Advancing the issues.
Yeah.
Don't you follow the more specific ADSPD, which is S&P 500?
Yeah. Yeah, I could. Yes, I couldn't. I have them with the X Suite as well, but on my other workspace here, I have several workspaces. I'm just want to see what is the overall market. We can as well as you mentioned, the ADD SPY or SP. It will work as well. So just to see what the overall market is, that's what I'm using. You can use them as well, of course. Yes, I have this DAX feed. How it is called? I don't have it started today. I have the XV data of all this ADDs and this correlated and ticks and trends and so on, but I haven't switched them because I just wanted to trade off a clean chart. I just wanted to show that you can even understand the market when you have these indications here on for the yes. For the NQ, Myron, we have to work out as we discussed. I haven't had the time to put everything on the documentation during the last days, but we should work on that. Maybe latest until we come together in December for live trading to have an alternative to the ES. What is the name? DX. DX Viewer, it's the name, DX Viewer. So, but I have any single signal here from the ADD for the NYSE, for the SPY, and so on. Just let's be concentrated and focused. SPY is down as well. We have a negative sentiment, a negative negative sentiment in the market right now. Don't be surprised if the market is trading down into the gap, closing the gap, and then maybe finding a way up, and that would be a really nice long trade, watching and seeing the 97, because there's still an advertising on 97, so the price and the liquidity is advertising. If you want to see an overall picture in the market, then squeeze your screen, bookmap chart. And what we see, we don't have anything specific. That makes me a little bit more nervous right now. We have had liquidity at 10. It was cancelled. It's hard to see, but it was cancelled there. We have We have 1002, which is really a prominent and important area here as well, and spot gamma combo. It's 4700. And as you can see, these shadows here, 010, there have been a lot of liquidity then at 010, and this is what I mentioned. It's not, now they're canceling liquidity here, so they don't expect, and that's my interpretation of liquidity. If they cancel liquidity here, they don't expect the price come back here, the price to come back. Strong selling, yes, strong selling, good. Still selling in the SPY, coming to this level here, 78. Most probably we see a nice reversal, by the way, but I don't dare to go against it here because it's all negative, all negative.
New liquidity comes in with 480 lots.
Oh yeah, I see that here. Well, thank you very much. Yes, at 94. But still negative, still a sell. So I missed that one.
That was a good short from was it Tom at 91?
Yeah. Hindsight, it was everything fine. That's the point. That's the point. Interesting what Bernie mentioned was the liquidity at, come on, 46.93. They dropped simply the liquidity, maybe awaiting to trade, maybe even at the end of the day, who knows, into 46.94. But at the moment, that's all a sell. That's all a sell, guys. Now the question is, if you are missing them, then you curse yourself because you haven't been concentrated. You see on the price dynamics, how fast, how strong they are hit. They hit the bid here. They hit the bid. Lift the offer a little bit just for, maybe for profit taking here, and then continue to trade lower. VIX is rising. Bonds are falling, dropping. Let's see if we see a nice divergence. What makes me really strong in this with my conviction about the trading is if we see a nice divergence trading up into a 78, coming back, but then we must see something in the volatilities as well. I mean, I can, let me say, scalp this stuff here when I see green, but that's only fighting for few ticks.
I would like to see occasionally how you would scalp, 3 to 5 ticks. And
Yeah.
what levels you would do it.
Yeah, okay.
I mean, you don't have to take the trade, but just call out what you would consider.
I mean,
aggressive
you
and
know, this
scalpers.
this levels are always important levels here for the market, and then you see how they are lifting the offer here, and then go in and be very, very fast to tighten your stops and take maybe 1, 2, 3 ticks out. If you are for two points, then maybe you are lucky to get 2 points out of this market here, but. Be cautious. That's not my style. I don't like it because it as you know, Chris, it went extremely fast. It goes up 2 points, and you have to be fast with this.
I agree. I tried to buy that and got whacked, but then I did a double lot at the bottom at 73 and got 2 points. So I'm still at my high level of the day.
Come on.
I'm curious if you ever change your position sizing to get yourself out of a jam you might have got in.
No, I mean, if I'm normally trading three contracts, normally trading 3 contracts and then just fading. Oh, come on. Yeah, that's. This was.
So I'm curious on the way back up where you would consider shorting, somewhere between 78 and 80.
No, I'm considering buying here right now because you see how this the price dynamics comes up here with green, and I'm just missing the trades. I want to trade a 74 long here.
Walter.
You want it to come back to 74 and you're going to buy?
Yeah, if they no, yeah, it's too late right now. So I must be focused. I must be concentrated to do so. But you see, it's really, really hard. Now the VIXs are coming down right nicely. You see how even the SPY bounced off here. We have 2 double tops at 46683. 46683. Nothing really special right now on the volatility indexes. No really significant divergences. A little bit of divergence on the VIX, but not on the ETF and stock. So sorry, Bernie.
I've got the entry at the low because there was a nice diversion.
Okay. But keep in mind, guys, these institution levels, take them for serious. Even if you don't believe that maybe institutional algos are running in between some levels which we don't have the right insight and the best, or even an explanation, not the best, but even either explanation, then but watch them, simply watch them. I don't want to influence you in either way. Take them. So Bernie is long, so far I know, 74.
Yes, I've got the entry at 72, 73, this area. Let me check the exact price at 73.50.
Okay, good. That's a sweet spot. You are in the saddle.
Yeah.
Walter, I'm long at 76 actually.
Okay, I hope.
Didn't get a great price.
Yeah. That's what I wouldn't like to do because I see liquidity here, and you must be lucky that they are trading into 77, 8, 9 to get profit. I would that you see the price dynamics here. Let's stick with the price dynamics in ES. It was hitting. Lifting the offer. That was the second point where to enter, 73, 74, and that gives you back 3-4 points. That's the point. I wouldn't go against when the market drops down and you see red here. Don't do that. We need to see green for longs and red for shorts, to be very simple. We have still negative sentiment. Now we have book flipping and pressure on the upside. You see VIX is rising, and the SPY is coming down. Cancelled.
Yes, so I'm taking a look at the profile today, and it looks like we're going to get an outside day. So
Oh, good.
yeah,
Good, because that makes us hope that this market is really trading lower and deflating a little bit.
yeah.
We have the 60 and this. I so far I know. Let me have a look. I don't have the numbers in mind. I think we have the 60 area, which is really important for the market. Where is it?
Whoa.
The buy sweep.
Yeah. I posted in the room something like 78, 74, 60 or something like that. That could be an important area. I think it was 60 or 70. I can't remember anymore. 67 here. It was very close to the 67, 68 area. Don't know it is 67 or 68, but it doesn't matter. It simply doesn't matter. We have a sweep, a sell sweep here, and a buy sweep. He is buying 1,200 contracts. And he canceled 92 here. So it's not expected that the price is coming up or trading into 92, and if, then we will see an additional liquidity coming up here, or maybe a little bit lower.
I don't think the selling is over yet. What areas would you look at to enter if you
I'm trying to
were
see
flat
if
right
I
now?
can get 73. I hope so.
You're
Just-
looking to sell 73?
No buy.
Oh, okay.
Let's see if that works. It's not the best entry here, really not the best entry. So that's really they might come down here. Let's see, they might come down here again. But you see how they're trying to support the 74 area.
And you're basing the 73 based on your price dynamics and the liquidity in the order book?
Yeah.
'Cause I'm actually looking to sell 75, 75.
75, I don't have anything here on my chart. But as well, the VIX is dropping, so we have a little bit of relief in this market. But they must lift off this 73 here. They must lift off this.
I'm curious what your stops are.
Just
2 or 3
a moment.
points?
Just give me a second.
Okay.
My stop are always 8 ticks, 2 points. I don't get a fill here. Let me see if this works. Wix is rising. No, I'm not in. Wix is rising. That makes me a little bit more uncomfortable here. I don't like that. You see, if they are coming back to... Oh, yeah, they're playing with the liquidity here. They're playing strongly with the liquidity here.
Didn't want to do anything at this moment actually because I had Al Brooks. You know Al Brooks?
Yeah.
Yeah, it's his price action, and he always says big up, big down, big confusion. Don't do anything. So, and in the overnight we had big up. At the opening we have big down. So I'm not doing anything.
Yeah, I'm not sure. So my idea is, if I would do something here, it's the 74 must be an support here. But anyway, they are playing with the liquidity here. You see that this was a resisting liquidity, and that come up. It still resisting. If the price comes back here, and they adding liquidity, that might be a so-called business done pattern. I'm watching the price dynamics. By the way, in the room when we are live trading, then I'm saying that I hate these levels really, because the price stacks at around these levels for minutes before it finds his way up or down. You see as well in the price dynamics, the market is not determined, so that means we have a slight buying, then selling, buying, selling. It's really hard to find something like before here. If you are long 72, then you got 74. But what what my goal is to get at least 5, 6, 7 points out of the market. I'm not a scalper. I admit I'm not a scalper.
That last drop went 3 standard deviations on the 15-minute, 20-day statistics. So it was a very huge drop.
It was
compared to past moves.
It was, and it was a high volume traded into this area here. You see sweeps and the big buys with 1,200. The point is, when you see this 1,200, that means he actively bought 676 and he passively bought 524. That means in sum 1,200. So the market is maybe, someone is preparing for a long position here. Someone might prepare, but that's not a guarantee. Sorry, I missed that again, guys. I have to be focused. I'm sorry for that, but that's not a guarantee. The market is going straight up here into the point. But
it's probably going to consolidate here, and then people who are short are going to get nervous, and then that's going to add to the up move.
Yeah, but let's stick to the facts. So we have liquidity here. It added again. Let's see if the price comes back here. If they are adding liquidity as well. What I see in the market is they simply keep the price around 74 and trying to trying to support at 68, 69 here, this area. That was, so keep the price, don't allow the price to trade lower. That could mean that they are trying to accumulate here. They are trying to accumulate They're trying to accumulate.
I was wondering if you can just quickly show me how you have your heat map settings, because mine bookmap looks different. I'll take a screenshot if you don't mind.
Yeah.
Can you just show me how you have your heat map set up?
No.
Yeah, you just right click on the chart. Yeah. Okay, let me take a picture.
Maybe your density,
Okay,
maybe your density here is a little bit different, or the contrast.
Yeah. Thank you so much.
Walter, it's okay to look on the bookmap VXX and to see hit and beat and CVD. It looks like more can understand what's going on.
Yeah, that's what I recommend is to watch here the VXX. I know you mean see this one here, this chart VXX here. Yeah, UV and VXX. Yes, it is good. So, but I can't manage all the charts here at the moment. It's really too much here, and be focused and concentrated and answer every single question. It's really a little bit hard to do so, and I don't have the view on my UVXY and the SPY, what the SPY is doing. That's really but you can do so. Yes, VXX as well. Let me see the VXX here.
I just looking for VXX and I see hit and lift and I do 3 trades. Was okay.
Okay. I'm not sure whether I understood you, but maybe I'm not sure if I understood you, what you said.
So if you're short, I assume when they start lowering the offers down, following the market, that's really good for your short.
Yeah.
So if they break the 74 and trade lower, the next level you're looking at is institutional 67 level, right?
Yeah.
Okay. And then if it stalls there and you see some green come in your price dynamics, that's when you would buy? Okay, thank you. That's what I want to know. Thank you.
Now we got a little bit more positive market. Not much, but a little bit positive market here right now. So you see nice drop in the volatility as well. Question here is where to enter.
And there's a divergence on the volatility.
Yes, as well. Thank you, for that. Now the volatility starts to drop, and if we are lucky, no, not if we are lucky. Now we have a very nice move down here.
I noticed the 80 liquidity just disappeared. So if you're long, that's really good.
Yeah,
I am 73. I'm long. Yeah,
I'm long. I just jumped in here because I saw this green coming up here, and the price dynamics, and I see the volatility is dropping here. I'm just taking one off. I'm too long, contracts long. My stop is break even. I hope this is not coming against me right now. And the next target would be 82. Now, guys, ladies and gentlemen, we are in the mercy of the market. We can't do anything, or at least I can't do anything but to control my position here. So my idea is, if we don't see any reds here and hard sweeps, I mean, someone can sweep through. Let you see that someone can sweep through and take me out. That's really possible. I don't have any control right now. So the only control.
I'm curious if you use time stops, Walter. You have like a 5-10 minute time
no,
stop?
I don't have.
that doesn't move?
Yeah, I don't have them here.
Okay.
This is really old stuff I'm using here, and the bracket trader from it was developed for 10, 20 years ago. I don't know. I'm not really familiar with the NinjaTrader Superdome. Although I have him here in chart as well, but I'm using this very simple system here. I'm connected with Interactive Brokers, and that's all. So just don't to be distracted. Besides the discussion here with you and the concentration, focus on the market, it might be a little bit too much than working and struggling here with the.
80 is the last 30-minute bar's midpoint, which is pretty strong resistance usually.
Okay, but you see,
it looks like it broke through.
But you see what I wanted to mention yesterday. Let's lift a little bit the my stop 77. You see very nicely that the VIX is dropping here. And the VXX and the UVIX, UV and so on is dropping. So that makes me quite comfortable right now. I'm missing my ADD chart, but I don't want to add another chart here to my screen, because I'm using the not ADD, my trailing system is the ATR. So the ATR, sorry. I don't have the ATR chart on my my screens right now. I'm a little bit blind right now, but I wouldn't like to see the price coming back to 77. I'm 1 off, 2 in. Okay. SPY is still rising. And I would like to see 82 and 85 the next, and maybe even trading into the 86, which is the VWAP area. That was a little bit shaky here at 60 when you see this variable price dynamics because of this big bullet.
Right now, Walter, the price dynamics is all pink.
The price dynamics is what? Sorry?
It's pink or red, pretty much red.
Yeah.
Price dynamics, it's all red. Or now it's becoming okay.
Yeah, the point now, right, is that they need more buyers. They need more buyers, and what I see is tick is coming down. That means the price will come down for a few points. I think SPX is leading, VIX is down. Now we have to ride this swings, these small swings here. Question is taking 3 points off or taking them all, maybe getting 84. That means would be nice 8 points, or even waiting for the 86, 87. That's now. I don't see anything else. We have more sellings here. I'm sure this is this institutional level 82, which is maybe the reason for that. And if they're coming against 77, so I get only one contract. I have to look at the afterwards. So
Walter, can you repeat your thought process? Actually, you said tick is, market fell down. So now you said few things in advance, right? Tick was what? What was happening to the tick? Tick was down, going down.
The tick. Look, I'm here. I'm watching the ADD, the overall market, and the tick. The NYSE tick is down here as well. When we see this ticks coming down below zero, they must, in a bullish market, we will see only, let me say, green candles above zero. going into 40, 500, 600, 700, 800. That means the market is bullish. The market is strong bullish. Let me just focus here on this trade here. The market is strong bullish. That means then we can consider the market is bullish when the tick is up 400. Everything above 0 is good for a long position. Everything below 0 is bad for a long position. Good, good, good. So I'm just trying, where's my into 76? I'm missing my ATR. Now they cancelled 83, 84, which could be a nice signal to me that the market is most probably going to trade, oh yeah, into 83, 84. What I would like to do right now is maybe, let's see how they are trading at 81, 82. And this is still a struggle here with this market. Maybe to take one additional off and let the market run. So that's my strategy right now. And if I'm lucky, the market will prove that I'm right. At the moment, the volatility is down. It's coming to these bonds are up. No, they're coming against me. The order book imbalance is on the upside, so that gives us a little bit hope. It's still on the upside. It's very clear into 84. The question is, they can trade, of course, into 74 and then coming back into 84, trading into 84. You see how this institutional level works. I hate them. I hate them, guys. So you can't believe that. Because when I mean when I'm in a trade, of course. My favorite trade, going into the trade and taking 10 points out in 2 minutes. That's my favorite trade.
Me too.
Yeah.
I missed the long, but I shorted up there around 81. So
okay.
I got out at 79 approx.
Okay. I'm looking.
I think it's going to chop around here probably for a while.
I don't hope so. I hope you're wrong.
I do too. I'd like to short 85, so I hope it runs there, lets you out with a big profit.
Yeah,
I'll short, fall back to zero.
Yeah, good.
The reason I shorted it's at the 30-minute statistical high, looking back over 20 days. This is how far this 30-minute bar moves. It stalled right there, and we had 3 standard deviation move down. So I figured it would stall out here.
Yeah.
Walter, that liquidity is it's awesome. I just did the AQ, and I'm just playing the liquidity with my technique, and I'm just pretty much following. I just have double confirmation right
Okay,
now.
good. So I'm out. I'm stopped out here. My focus was this 84 target. Didn't work, but anyway, you know that's the point. When you see the sweet spot, or the sweet spot was. Where was it? I think it was, where was it? Something here. There was one. Then we have here this strong sweeps around. Then I jumped simply into 76 here because I saw this green price dynamics coming up. My target was, I was focused on the 84. So they canceled that. That was a fake maybe. It doesn't matter. Every tick counts, guys. Everything, every single tick.
A quick question. If an institutional level gets broken, like 78 just did, is it pretty decent to buy on the pullback right before 1640?
Yeah, I mean, what I've learned from these levels is that the whatever algos are doing, they are using these levels just either to find to take time to whatever they're doing. So I'm using and consider them and support and resistance levels. That's the best way to use them and to understand that, yes.
So if we see some offers coming in at 78, since it's an institutional level and we broke, that'd be a pretty decent sell with 74 as the target, right? Okay, great. Awesome. I understand.
Wow.
I already had a limit sell in there at 78, but I never got filled.
Yeah. Look here at this you see how powerful TradeFinder was or is. In this case, we have had a very high volume with 1,100 at the ask. Liquidity at 1,100 at the ask, for a very short time, just pressing the price down. The question is what they want to do now. Do they want to find the bottom of the day here? I don't know. But the fact,
what indicator is that square?
That's a TradeFinder. That's the liquidity tracker here, and the liquidity tracker has two functions to track hidden liquidity as a relative liquidity and absolute liquidity on the chart. So when the book changes, we talked about that this week. When the book changes, here you see that. It changes extremely quick. That means fast. You'll see what happens at that moment, 77. Look at 77. There's just a moment. Just demonstrate that. 77, come on. 77.33 sitting at 77 at that moment. And then someone added high liquidity here at 1,100. You can't notice them. First of all, if you don't have a dome on the chart, and even if you have a dome on the chart, you are focused on the price action here. So you will never notice this very fast and hidden moves. And TradeFinder tracks the dome, and then if my settings, for example, my settings are 650, and I'm tracking the first 10 levels. That means I'm 2.5 points, or 10 ticks in this case for the ES, 2.5 points, 650. Well, I want to see 650 volume at least, or contracts at least on the first 10 levels of based on the BBO. Yes, best bid offer, and it indicates that was very, very fast added liquidity there. Simply to press the price down. I can't resist to say I see more longs than shorts right now.
What's your reasoning?
I think they are simply accumulating here. Around 74. Look here at this area around 74. They resisted the price at 83, 84. Then they are adding again at 74. Look here exactly at the institutional levels, because these levels are in long before the market opens. So we don't see anything that's any liquidity or anything special at 74. Now suddenly 74 comes up, or it's shows liquidity here at that point. I'm sitting on my hands because I don't have any idea what to do here.
Well, see, I was going to sell the 78, but it's spent so much time just going sideways here. It's probably not going to work now. It's too late to short it.
Yeah. I mean, I'm not in the mood to trade right now, and because I don't have a very clear picture. My bias at the moment, is more long than more bullish than than bearish. So it's based on the high volume traded. That was a extreme high volume traded, and when this unloads, it takes time. I wouldn't wonder if they are simply going back to the 90s and 4700. But when this volume, and that's the reason, this extreme high volume here, they unloaded everything, and it might be that this is the reason, and no, it might be that this is the bottom of the day. It might be. It was predicted at.
I see, because of the high volume.
Yeah, the reason for this low, you see, that's the high volume. There's a big bar here, and then you see only small bars here. You see a nice divergence as well here in the stop run indicator, or MVP, or V delta, or whatever you want to call it. And that's the reason they are simply trying to accumulate and then lift off. Let me see if we have we have upcoming liquidity starting at 4700. It's nothing spectacular right now. That might change. And this 1103 here, 1103, this what is a square, simply shows that they wanted to buy at lower prices. I'm pretty clear with that. I don't have any other charts. I'm not watching the UV because UV is quite interesting as well, but it's a little bit too much now commenting, discussing and trading. But you see as well at the UV, how to do that here on the screen. Let me check the time. It's the time, let me check the time here. It's 16:48 my time. 16:48, excuse me, 41. I think it was 41.
I'm looking to buy the 78 pullback since they broke it. Now we're retesting.
16:48.
I just got filled long. 78. Just a point lower.
That was the point. That's what I missed here. You see, I was long here, and
my average was 77.50. It's working pretty well.
Okay. Guys, ladies and gentlemen, watch. I missed this really big volume here, and that one as well, because I was simply focused on the three charts and discussing it with you. But that was the sign. You see, 41. That's 10:41 your Eastern time. When you go back, 10:41 is here. I missed that. Therefore, I should have cancelled my previous or take the profit there.
Maybe you can add like the volume of the each charts on the NinjaTrader, then you will able to see.
Yeah. But I just wanted to keep this clean as possible, just to motivate you to not to use anything else, but watch the volume. But at the moment, it's really we will see that in the trading week in December. But it's really hard for myself to focus on all 3-4 charts here. I have six screens in front of me, and that's a little bit too much at the moment. Still focusing on the S, on the SPY, the WIX, the VXX UV, and the bonds. And I'm watching, trying to see, I'm watching at a UV bookmap. By the way, two nice signals here. Two nice signals based on TradeFinder, based on liquidity. First one, the resistance at 1519 in UVXY, that was at 1628. 1628 was here. Very nice confirmation.
Are you using a DX feed for those other symbols?
Yeah.
Okay, I see. I'm sorry. It's on your chart. Sorry. I was just thinking, a person can make a living just trading these institutional levels. Once they get broken, wait for a pullback, hold, buy, or sell.
Yeah, that would work. That it can work. It can work. I'm simply amazed because they are working very well. Not very well. They're working maybe, I don't know, 70-80% all of the time. I'm very cautious with these percentages and statistical stuff. I just followed them and did some Excel sheet to see how they are working, but that's nothing scientific. What I did just to understand what I'm doing, because when I get in touch with them and with my colleagues, friends, and associates, they told me that, and I couldn't believe that, simply because I don't think there's something out there which can.
Do you get it for the NQ as well?
Sorry?
Do you get the institutional levels for the NQ as well?
Yes.
Oh, you do? Okay.
Yes, but I don't have, I don't have the time simply to it's when I get the market view or overview, these numbers are not simply to copy and paste. So that's not something I can copy and paste and then I'm fine. And it takes some time to assemble them.
Gotcha.
I would like to encourage you, UVXY. You see what I'm talking about is here, long, short. Actually, long, yes, long here and short here. So
you have also VXX and VIX shows.
Yeah, exactly. Help me, guys. I'm just a little bit under pressure here because discussing, explaining everything, and trading that makes the life a little bit more. That makes the life sweet, but a little bit more demanding. So
if you guys don't mind, let's just leave Walter and Walter, could you just explain your thought process, what you're thinking, and then we'll try to leave you alone so you can concentrate.
Yeah, thank you, Julius. Thank you for your support. Thank you. Just let's see what we can do here. So to recap that. The market stalls here because we have a high volume traded here at 10:20 Eastern Time. That's the reason why the market stalls. The most probable and best view is if we see this volume, then the market retests the lows and then it jumps or trades back maybe into this institution levels, maybe even my idea was that the market price is going into the VWAP area 86. But the reason for my assumption why I'm more bullish than bearish is at the moment not only the sweep we saw here. There was one guy who was buying 1,200 contracts, but all this what is this bunch of big bubbles here, which represents the market volume. So that is the reason. That is first the reason for all the following price actions. And now the price is rising. And if you want to find sweet spots, then you should have a look at least at a UV. As well VXX, depends on how many screens you have and how many eyes you have free for watching them. But you see 1519 was a perfect entry, long entry in the ES. You see liquidity, you see this liquidity changes here, the absolute liquidity changes here, and that's simply amazing. Therefore, I think the liquidity tracker in TradeFinder is of extremely important and helpful, because you will be alerted that this is maybe a good entry point, and that as well that was the last exit for longs here, because when the volatility is up, then of course ES is down. So let's see. I would say nothing to see here, please disperse, but The ADD is a little bit more positive at the moment, and the tick in Trin is as well lifted off the bottoms.
Walter, quick question. I've noticed, as is the case with a lot of support resistance areas, once one gets broken, usually the next one farther away holds. Is that a decent counter trend strategy with these institutional levels? Wait for it to go through two and either buy or sell the next one for counter trend scout.
Chris, I haven't done that up to now, so I don't know. Maybe it could be because this institutional levels you will see at the end of the day they are extremely well. So we could build strategies around them. Yes, we can, maybe, but I haven't done that up to now. Maybe you have, Chris. Maybe you are welcome if you have ideas how to do that, or maybe building a strategy or idea how to trade that around. Then please post it in the room, or let me know. Let me work on that. Maybe we can find something. I don't know, but I didn't have the time just to build strategies around this institutional.
I think if we zoom out, let's see if that worked earlier for the fall.
Yeah.
Like when the first level got broke, did it bounce on the second? Earlier?
Where?
Can you zoom out and see earlier today before the drop in the book map? Yeah, there we go. So it hit. Yeah, it did. Look, well, actually, it went through two of them, and the third one's held for a scalp.
Just let me. Normally I'm adding them before the session because now it's simply disturbing. What is this? 4691, 4692 or so.
You look at wedge patterns. Like right now, the market's kind of in a consolidated wedge. In the trend so far for the day is down. Obviously, if it breaks down, you sell, and if it breaks out to the upside, you buy.
What pattern do you mean? I didn't get that.
Well, it looks kind of like a wedge pattern.
No. I'm not just looking. Yeah, it can be, but I'm simply following the chart here because, I think it was Bulkovsky chart pattern book. So there are simply several probabilities if you look at the wedges and so on. So, but I try to focus on what the market is doing right now and not to interpret too much in it. You see wedges as well; they can work. But what I want to see is what the market is doing right now. You see the VIX the volatility is rising as well, slightly rising. That means it gives us a nice sign for sell. You see as well in the UV how extremely helpful it can be when you see this big not bullets but dots here. How they are called? Volume. Heat map, large. I'm lost. Volume bars. The volume dots here. When you see these big dots here, as well, and then we have a really strong synthetical iceberg traded here. This is in time. We don't need to interpret or whatever. We don't need to guess. This is in time. When you spot this, when you watch this, when you see that, then that's an alert that this might be. Comes together finally here when I'm hovering my cursor on the UV as well. Let me see if we can do this. Yeah, it's hard to see, so it's not possible. When you hover your cursor about on the second chart on UV, for example, that was the signal to sell. At that point, maybe a little bit later. 80.
Don't want to interrupt, but can you show the VIX and VXX also on the book
Yes,
map?
yes, yes, yes.
No, not on the NinjaTrader. I mean,
Yes.
book map.
Yes, yes, yes. I don't have the VIX, but a VXX here.
I wanted to see, does it correlate with the UVX?
Yes, it
UXY
does,
also?
but I don't know how to show that.
I mean, the order flow, the same like trade finder and trade sizes.
Okay. I haven't maybe adjusted that, but they're correlating here. It's really hard to show that. It's really hard. Now the ES is going up. What time? 16,
Yeah,
15.
okay.
You see it. You
Thanks.
see that here. I have to adjust it a little bit more better here, but you see on the this volume spike on the VXX, it's here.
Yeah, 6:15. Yeah,
It's
quite
correlating. It's correlating 1-to-1. It's correlating one. You
Thanks.
see also as well that's a high, and the next leg is a lower high. And what happens? What's really nice to see that this is big liquidity came in here right now when they're trying to trade higher. So they simply dropped the volatility, and that might be a very nice entry. Or not? That was a very nice entry for the ES or in ES. Let me just find my book map again. Where's my book map? I lost my book map. At the moment, it's a boring time, guys. That's on Thursday, and we are trying, Doug and I, to do live trading on Thursday. For some reasons, I thought Thursday is a good day, but it turns out that Monday is the best day, and then Friday, even maybe Wednesday. But Thursday tends to trade for the next 2-3 hours simply sideways, and that's really boring. But anyway, you see here that's 76 long based on price dynamics. We see a nice liquidity there. They canceled liquidity here, and tick is up. So the ADD, I think the whole situation improves right now in the market. Maybe they are not finished yet. It's quite interesting to see. Mind to time. The time was when this big volume was traded here. That was 10:20. Now we are in 11:07. That means nearly 1 hour. Now 40 minutes. 50 minutes. They are trading around this level 50 minutes.
Walter, I'm curious if you use market or volume profile levels.
No, I don't use them. I know I've did a seminar course with Dalton, but I don't use them. I was using
the 78 happens to be the lower value here.
Yeah, I know.
And combined with your institutional
Yeah.
level, that's why it's probably bouncing from.
Yeah.
A lot of people do use it.
I'm not using this volume profile levels at all because I just refuse. In other words, I would like to see what the market action is and not what some levels are telling. They are working sometimes, but more at least from my point of view, Based on my experience, they work sometimes, but they are not working. And other times that it can work, but it's not reliable enough, at least for my in my trading philosophy. So I know them. You'll see we have an extreme low volume area here between 81 and 87. This area wasn't traded, it simply broke through, and now trading established in another high volume area around 78. So they're lifting, maybe they are trying to lift the POC towards 78, 77. And that means they're lowering the value of the price, the value of the product here from 92 into 70, 80. And they are maybe retesting if they can get buy or sell between 87 and 87 and 81, roughly, this area here, where the VWAP is as well. That's a VPOC, yesterday's VPOC. Then we have yesterday's value area low here as well. That could be a kind, yes, see that. They lowered the POC right now from 92 into 80. So the product is less valuable, or has a less value than yesterday, which means, that no, when we know the ES is worth less than it was yesterday, what should we know for our trading right now? What's the point? Long, short, sideways, waiting, what?
Long, right? If it's worth, yes, lower.
I don't know. Look here, what happens in terms of volume profile, in terms of Steidelmeier and Steidelmeier and Dalton. In terms of Steidelmeier and Dalton, the value of the product was lowered from 92 into 80 right now. So what does this mean for our trading? Can we make money right now?
When value shifts down, they don't really focus on price. They consider that a bearish sign. But above the POC, it's bullish. So we're above it now.
Okay, let's see.
When it retests back to 80 and it holds, it's probably going to move to 84, 85.
Yeah, let's see. I don't have any signs here on my charts, on my system, which I'm watching. If they are trading right up into the 80 and the VWAP area, which is most likely they are going to trade into 85 into 86 VWAP as well, this institution level. I need a reason, I need a sweet spot to enter my trade, so I missed it again, but it doesn't matter, just to discuss it with you.
There's also one time framing also, right in the middle.
Good. That was the final target, my final target here at 84, where the market didn't want to trade. You see nicely all the volatilities are down, bonds are up. Order book imbalance is up. Order book imbalance is up, pointing to the upside. And according to order book imbalance theory, market seeks liquidity on the side where the imbalance is.
So now that we broke out of that consolidation so strongly with such high volume, you look to buy the pullback somewhere around 81 to 80?
I was looking to sell 84.
Okay. classify your style more as looking for levels, seeing volatility there, and kind of doing a lot of counter trend trades at extremes, or wait for a trend and buy it or sell a pull?
Both. I think what I would like to see is simply to have reasons to do something. So I have two approaches. First of all, when I see reasons to do something like in the UV, I'm taking along when I'm aware that this is a signal, and then I get a signal, then I'm certainly short or long in the yes, of course. And sometimes I'm simply adding to the bid or to ask whatever when the market is trending, when the market is going fast into one direction. The best what I would like to see to give me a reason for something to do, but sometimes it depends on the mood. I'm very open with you. It depends on the mood, what the market is doing, and if it trends very fast, then I'm simply joining the bid or ask. It depends on. But I like it to see the reason. So the reason, as we talked about for the up move, as I talked earlier, is high volume here. High volume, that was the reason. Consolidation area or accumulation area, if you want. And then that was my view that the market is more bullish than bearish.
Curious if you use higher highs, lower lows.
No.
In your analysis. No? Okay.
Just watching them, and if we see, you can use them, and look, you have, look here. That's a nice one. That's a nice one. So this is a divergence. You have, mainly divergence. We have the VWAP, we have the institutional level, we have the lower volume here on this stop run V delta indicator, indicating. Doesn't mean that they are not coming back here, but this is really maybe a sweet spot to take a shot if you want. We have the VPOC yesterday's close here. Again, they are retesting this area, and then that might be a point or level of interest here. We have a nice support at the UV. Myron, I put a cheat sheet in the documentation. We haven't had the time to talk about the cheat sheet. It's open for everyone of you to add some ideas, your own ideas, on the cheat sheet to get to get some ideas what you could watch when the market opens. Maybe we'll have time a little bit in few minutes when the market runs into a break, or when we maybe do a break. Then let's go to the theory, or the last pages of the documentation, let me say it that way. The interesting point though is when you watch the MVP, the stop run indicator is deteriorating, high volume here. They are trying to move the price with lower volume above this institutional level. They are at the VWAP here, 86. We have, by the way, when you watch the EUV, you'll see liquidity here on the upside at 1519, and you'll see, given the theory is right, they find a double, they will find a spot here. Then the theory would say, okay, the price looks yes, is watching for liquidity, and if this is true, then the price of the EUV or VIX should go up from 40 to 90. And in this case, it would mean, or can mean, oh no, not, it means that the ES is trading lower, or will trade lower. Wow, now we have a nice DID. Watch. We have a nice DID here. Watch that.
So Walter, how do you interpret that?
Just a moment, give me a second. You see a very strong support here on the EUV. And give me here second. I took a short here at 86 or 85. At that moment, an iceberg was detected by TradeFinder. I think Srini, it was you? Yes.
Yeah.
Let me just keep my risk here low. I don't want to see 60, 86, 50. Now it's gone. First of all, this iceberg wasn't finished. And the DID started to run here. Watch this area here at 86. Give me a second. Give me a second, Srini. I need to control what's going on here.
Okay.
Strong volume, exhaustion, divergence, coming back, retesting 86 or 85. Very nice movements. Hopefully will come true in 1519, adding at 16. UV is growing. It's not much movement in the ES. According to the liquidity theory, it should go up. It does not mean that it's go straight up right now, because I'm in, or whoever is in. But the probability is here.
So UV up means ES down, right?
Yeah.
Okay.
So someone sold 529 here. Actively 412 market by market, and then on the limit side 117. That means in sum 521. Let's see if they can make it up here. That could be as well a trap. As you remember, someone can sell and the market still goes up. I need a little bit more support on the volatility indexes. My stop is 86.50 here. And the ugly time, what I don't like is they need now 10 minutes or 5 minutes and 10 minutes without any conviction about a market, and that's something I don't like. And what I don't like is the tick is rising. Not sure if I'm going to be stopped right now. It can happen. Now we have two targets, either this 92 or this 82.83 here. That could, the next institution level at 82. That's unpleasant for every one of us. You know, you have a clear idea and the market is not following you. Canceling liquidity at 82. Starting to rise as well, the liquidity and volatility. That's not bad. Maybe I am lucky and get some points out, not sure. It's really very tight trading right now here. There are still more sellers than buyers.
What was that?
I should cancel this position here. I don't like this price action. It's not moving anywhere. I mean, the risk is 1 point, but I'm not willing to risk more here in this case. I don't like this action, price action. I'm just considering to cancel my trade. And I bet when I'm canceling my trade, these stuff will trade. Yeah, we'll see that. Oh, come on, that's really bad. That's simply luck, guys. That's simply luck because this stuff is not trading in any direction since 10 minutes. I took one off. I have two in. Disgusting. Yeah, now they are going against me. Yeah, I'm out here. That was something, that was a trade which was really feasible because the UV was at the bottom here. It means it was a nice sell, but you see 10 minutes simply trading around this 86 level. And I wouldn't be surprised if they're coming back here. I wouldn't be surprised. So that happens, simply that happens all the time here. Or not sometimes, and then if it goes longer than 10 minutes, I'm just considering to cancel the trade because that's not what I want to see. They have cancelled the liquidity at 16 even, so the market is quite bullish. My idea was to short the S86. It worked for a few ticks, and took 1-2 offs, and then I was stopped at 1 tick, 1 point. My idea was that I'm going to trade into 82. Oh yes, EU was at a close date. Quite great point. Good point. Good point. Okay, lifting the POC up.
What?
Let me just see. I would like to now switch my bias to the upside. Oh, it was all the time to the upside. You see, I missed that here. Again, this very strong price dynamics was green. Sell sweep 300. They're trying to push this price up for any costs. You see the SPX is rising. Then VIX is dropping. That means the bonds are up. Maybe something happened. I'm not following the news right now because this would be more distraction than it helps. I'm not following the news, so I don't know if something has happened or someone is speaking. Not sure. This might be a good support here. Let's see if this is holding. Can anyone have a look at the news channel? If we have some announcements or someone is speaking.
I think there's a lot of news actually at the moment.
If Mr.
Not sure, but FMC has been talking all over the day.
Oh yeah, that might give us an good idea what happens if someone is speaking here. It's really hard to judge the market or to understand the market. Anyway, I have two reasons. I missed a lot of trades today, but I have had two reasons. So as I explained, and that was the short to sell the 86 maybe into 82. That was the other reason. But when it takes or took 10 minutes to move around, and that was I'm simply put my risk at 1 point and hoped for maybe 2 points, but it didn't work that way. Let's see what on the upside we have. Again, liquidity coming up at 4,700. You see the strong liquidity here.
Whatever, man. Okay.
So the most probable point target might be this 4,700. You see how they are adding to 4,700? Supporting the 4690. They must break 94 and then trading into 97, where the combo level of spot gamma is. And the volatility is dropping hard. I just jumped on board here, guys. I just jumped on board here. Took one off, long two. Next, if I'm lucky, I will get 97, 98. If Mr. Evans is speaking positively about the US economy. Focus on the price dynamics. It's green. Now it's becoming red, which I don't want to see. I mean, it's not a loss because I closed one with 2 points, so but it's not a really gain here in this play here. Yeah, tick is coming down right now. I'm most probably
volatility is holding. Volatility is holding.
Yeah, it's good. Come on. Okay. No luck today, so it's really hard to get 5 points, 10 points out of the market and to be focused. The first trade was the best one, to miss the exit. Then I'm talking about my trades. Maybe you can as well talk about your trades, what you see and what you get. But just to show, I wanted to show you how I'm trying to trade to find reasons. The reason, one of the biggest reasons for myself on the S in the S is the price dynamics, which gives me really a good idea. And when we are lucky, we get few points out. But you see how this institution levels really worked. It's disturbing. I mean, it's disturbing when you are in and you see this price approaches this level, and then it stalls at that level and comes trades against you. That's what I'm talking about, disturbing. Why I was stopped out here? Oh yeah, Reimer, have a good day. Bye bye. Picture is still valid in the UV. That means we have 1519 with a high liquidity sitting there. As I mentioned, it doesn't mean that the price is going straight up into this liquidity. And as well, we look at the SPY. Let's have a look at the SPY. We have had this very strong liquidity, which was the magnet for the SPY. And now they cancelled liquidity. I don't see anything else above adding up. 46.90.20. Oh, look here. We have a very nice dynamic iceberg here developing. Started here at 11:39. The first touch was here at 95.96. Let me see if they can come back here. This iceberg is 4 minutes in the book, or for 4 minutes in the book.
So there's like two possible outcomes now. They're gonna go after 4700.
Yeah.
And they will ice it to get the price there and take the profit there, as they see the liquidity, or they will reverse it. But I don't believe they will reverse it here.
Let's see. Do you remember the longs, the sweep long? Let me see what it was. It's really a hard day, but as we concluded at the right point, we have been. This was the reason for bullish sign, and I mentioned and said, okay, that this market is bullish. So it unloads here in this at that point, and then now the sweeps, they sold 1,200 contracts. 1,200. Excuse me, they bought 1,200 contracts. So the icebergs are gone. That it was not probably it was not him who collected 1,200 contracts here, because these icebergs have been really below my threshold, which is the, let me have a look here, 300. Let me put this 150. Well, let's see if we see some icebergs here. 150. It's really a small one. We saw 2 icebergs trading here. I'm just reloading the icebergs here. But someone is, according to our theory, oh, there have been less than 100. You see, there's no sign. There's no sign here. Let me see if this is 100 or 100. So it's not meaningful enough to say the market will stop here or not. We are trading the yesterday's high. We have the combo levels here, institutional levels as well. 4,700 is sitting there. We have everything is bullish, reddish, greenish, excuse me, in this case. Yeah, there have been very small icebergs here. Still trying to resist this area with an iceberg. You see on the profile here, by the way, it's this green, this red bars. It's a kind of resistance. It's a kind of resistance. Or it shows a possible resistance, but it's not strong. We have 100 here sitting. Breaking the strong, you see how SPY is breaking the strong liquidity here at 462. That's all bullish. This was the resistance area here based on the icebergs. Interesting point when you watch the SPY here on Bookmap, you see exactly where the important liquidities are. They lifted, that was one cancelled, came back, resisted. They lifted then to 469.30. 469.30. It is really helpful to watch 469.30 here. bonds are a little bit weaker. It's not much. It's very hard to read it. So let's see what we can do here, or if we can do something. The overall market is minus 1100, improving a little bit. I'm doing nothing here because I need to see a nice divergence in all indices in order to take a trade. At the moment, the 4700 is 96, 95, 98, 4700 area is a strong attractive point for the market. You remember, I think it was 4700 this where they traded above. That might be a psychological level as well. So let's wait and see if we can get a nice sweet spot. Oh, look here what happens. That's quite interesting. Canceling at 4700, adding at 4700. Maybe they are retesting the yesterday's high, which was at 46, 96 something, yesterday high. Again, you see how this institution levels are working. That's really amazing. Dropped up and traded this liquidity at 469.20. The volatility is a little bit up. Bond starts to yeah, it's hard to say, to trade lower a little bit, but still no really big moves in either of these indices. It's stuck at 95. I don't have any reason to do anything here. I don't see any volume spikes, I don't see any sweeps, I don't see any big volume or DIDs, icebergs traded. I see liquidity at 4700. I see quite nice, decent liquidity in UV at 1575, 1580, 1590, and a good liquidity in SPY at 46930. So everything is possible, but you know, I'm just taking a break, taking a coffee or grabbing a coffee. I need a coffee right now, so be back in 5 minutes, okay?
See ya. See ya.
So hi, I'm back. You see how the VIX is dropping, so this is going higher, higher, higher. We don't have any reason to sell at the moment. We have now two situations in the UV. That means we have volatility at 1518 roughly and 1519, and as well at 15 even. So both directions are possible. And as well on the SPY, very nice situation at 46, 469 and 32 here. Most probably an attractive point. But as long this VIX is dropping, that's all buy. We have to look for buys. Although what makes me a little bit uncomfortable here is that the overall market is still negative. So we are still in a negative overall market. I'm not sure. Maybe for those of you who are trading NQ, I can't in the moment see what the FANGs are doing, so if they are leading or not. Look here what happened at the SPY. Simply they cancelled. Look here. Crazy. 4,700 buy sweep. There someone bought again 500. That's all bullish at the moment. As we mentioned, and the reason for this bullishness was the high volume. You remember high volume traded into the 70 area where we discussed it, and I mentioned this is, to me, everything is bullish here. Let's see where the next levels are. Yeah, the 4,700, 4,702, and then let's see if we. What was the prediction for the day? $47.09, 10.13. Okay. Yeah, it's screaming up, up, up. That was absorption, by the way. For those of you who wants to see absorption, that's a real absorption because market volume met liquidity, arresting liquidity here. I'm long again here. Let's see if that works for me. It's 98.25. I took this 98 here. It will be very hard for the market to trade higher into 02, 03, 04. Extremely
47.10 is in the play right now as they added
Thank you for that. Yes. You know what we need, or what I would like to see, is simply a little bit more commitment when I'm entering a trade. A little bit more commitment of the market. So just to go my way, and as you can see, that's simply not the case today for some reasons. But it's okay. That's really okay. I don't want to risk a dime here in this trade. The reason is the SPY came down, or come down, or is down, exactly, and that means the S&P. I'm canceling the trade here with a 1 tick. Then this is really returning, so everything is going against me at the moment. This 4700 is a strong support. Absorption, really good absorption at exactly 4700. We can read that absorption at what it is. Yeah, exactly at 4700. Oh wait, happened. So Chris, I'm just following you today. I'm scalping. I'm sorry for that because we missed a really long move from the 80, 70, where it comes from. Yeah, look here, 70, 30 points. 30 points move up. 30 points move up. As well, very nice to see on the SPY when you're following the price dynamics. When that happens, that's exhaustion. The price must retreat, or the buyers, we need more buyers to lift the offer, as you know, and that means exhaustion. That means that the price is most likely to come down a little bit, but it's still, everything is bullish here. Although I'm quite pretty sure these are the FANGs who are driving. Let me see here the NQ. High volume traded into 4700. Interesting to see a small divergence here. Ah, yeah, it's gone. Very small one. Selling, they're buying everything, so there's really no no stop. You see that the nice divergence excuse me, here between this point and that point here, but that can change, because if they are really want to buy everything, that's meaningless to see. They can't jump in and buy everything from here. So what now? Any ideas? That was a, you see, very nice on the price dynamics. Very high volume traded here, very high volume traded here, and you can imagine that's kind of divergence. Even if you don't have the MVP or whatever you might have, you will see that as well. This is the volume here is higher at that point at 1205 and instead of what is this, L12, it doesn't matter, 1215. So high volume here, but it's still everything bullish. Everything is bullish right now. It looks bullish. They must break 01 or 24. Yes, I would like. So just it's up to you whether we should discuss the documentation, the few points again into the in the documentation, just to to discuss. There's still few pages we should take and we should go through to complete the documentation as well. I don't know if you are in the mood or maybe you are tired, whatever. So I just don't have anything else to say based on this price action here. We reached the 4700, which is a crucial area for this market. Hard to say what's going on here, if they are really trading will stop here, because what makes me a little bit more, you see this big liquidity at 15.19. I mean, they can cancel it before the close. Before the close, so they can't cancel that. That may be a fake, but it's still in the book. 15.19 is still in the book, and the price is still moving down. We see 15. Really not no no strong signals here. Everything is up. So the question is, I don't see any reason to go long here. I mean, what I can do is simply going blind long here. Yeah, we can jump into and hoping then for more points for higher prices.
Yeah, it's risky as like this VIX and volatility is doing also like really weird things already. It's starting to topping. But the squeeze will be like quite a little. It doesn't make the effort like to go long right now.
Yeah, that's my issue here. I mean, they are going long on low volume. That's very clear. You see that?
Yeah, exactly. As you saw, like 4,700, there was one iceberger, like there was one guy sitting on the ask and refreshing, and then they took it really easily. So you can't do anything. So maybe if to go back to the course, maybe can we go a little bit over the gold and crude oil in terms of DID?
Yes, we can do so, but we need a good example. Oh yeah, we have here one. What's this? This is gold.
Yeah, exactly.
Ah, good point. So let's. I think it was I'm not sure. It was a question from Srini. I'm not sure if he's. Don't know if he's around. And let's talk about the DID a little bit. Yesterday, let me just go to the documentation. Yeah, we talked about this DIDs here, and I think it was Srini when this DID came up. And I think it was a yes. And the purpose, I ask you kindly, come on, discuss with me. The purpose of the DIDs is simply to find interesting or points of interest where big players are playing or positioning themselves. So we said, I mentioned yesterday, let me find the picture again. I mentioned yesterday that we can detect and track every single dynamic development of an iceberg. It starts somewhere and then it starts to be filled, or yes, it's transacted at a certain price. I mean, they can lower the price, and they can as well follow the price all the time. So as Philip mentioned yesterday, we have found some interesting relations or parameters where for ES we have tested only the ES, which are interesting it might be interesting. Let me find the description here. I'm just watching where it is. Yes, it must be in the book for a certain time. It must have at least 150 contact in regard to the yes. So we are talking about the yes, and we must maintain a strict risk-reward ratio and stop policy. That means we must not have more than 9 ticks. Let me see the gold. It's still there. So give me a second. I have to add. Now in gold I have defined 100. That means an iceberg which is bigger, or yes, bigger than one, larger than 100 lots will be displayed in gold, for example. And if the portion of, or the part, or the refreshing part is 20%, that means 20 contracts, it will appear as a dynamic iceberg in the book. So at the moment, what I see right now in gold is this iceberg was in there 2 hours and 37 minutes, and the first part of this iceberg was traded at 86, or with 86 contracts. So at that point, this price you see very nicely here when you zoom in. The iceberg or the order ID was placed at 9:44. Oh, 9:44. The first part was traded here. The second part was traded here. The third and so on parts have been traded along the price here at 67.60, and a part of this iceberg remains unfilled. It's not finished yet. You know, the idea is to say, okay, we have tested the DIDs because they are prominent, they are there, they are acting or can act as resistance or support. And we distinguish we distinguish where the size, or either it's an ask or it's a buy by the color. That means red means ask and green means bid. So we have at that point 86 have been traded, and the best idea is to go when you see the IDs, to go against them. As well as mentioned, we have only tested ES, not gold, not CL, not other instruments here, because it takes a lot of time, and there must be millions of routines, millions of routines, as Philip mentioned, parameters, which must be tested to find a good set of parameters where we can rely on. And the reason was, the best choice is to sell this DIDs when it happens. It was in the book for it's now it started at 10:44, and when you zoom in on your chart, you will see that here they traded it several times with 100 lots here, 100 lots here, icebergs, and this is still not finished. Therefore, we are missing a second or third flag. And the interesting point now, we can conclude following. When we see that's a fascinating behavior. When we see that, we can go again, and that means we consider that as an resistance, and then we are trading against it. That means it goes, yes, we have to sell it. So that's what I want to say. The question is, the theoretical question is, what we see very often is that the price, when it remains in the book, and you see this order ID is still in the book, and you can imagine that an order ID, this is done for sure by an algo, and an algo is following strictly its rules. And the algo was programmed by programmers, and it has a logic. And now this guy is still sitting, or this algo is still sitting on 67 here, or 68, 67. Still sitting there, it's still sitting there and waiting and waiting and waiting. The most probable outcome will be that this price is simply trading down, and then finding a support, or maybe here by this 100 iceberg at 60, and trading back then to hit and to transact at 67, 68 here. That's the most probable outcome. It can be. Otherwise, if this guy is not expecting the price the price comes back, because price rushes down into 42 here in this liquidity, then he most probably will cancel this iceberg, and you will see a flag here coming up with 86.
I'm wondering, like, only 2 contracts left. Like, why you have to keep between?
No. That's not the point. No, these are not
okay.
2 contracts. He didn't leave only 2 contracts in the book. He is expected the next field to be traded with 2 contracts, and then he can, or the order ID most probably. Excuse me, I have to. The next. The next order, the next transaction, or the next trade is awaited with 2, and then the next might be 10 or 20 or whatever. You know, that's not that he's awaiting only 2 contracts. We don't know when these 2 contracts are traded. Then he can, or the order ID will be refreshed, and then he wants to sell maybe another 10 or 20 or whatever.
Okay, so he can like add it there more contracts again and offend this level.
Absolutely. So he awaits the price coming back against him, and then the algo will or the transaction will be only 2 contracts, and then maybe is going to refresh his iceberg, and then with the next level one, or he wants to trade 10. Refreshing again next 10 or 20, and then refreshing again, maybe 5. It depends on. It's really depending on. That means that this is an unfinished iceberg, which is in the book for 2 hours and 43 minutes and 46 seconds. We have already traded 86 contracts, and the next awaited trade is for 2 contracts, and then we will see. Then he has sold 88 contracts in total, and maybe he is up to 100. So that means he wants to sell another 12 contracts here. So, and when given, let's take that if he wants to sell 100 contracts, then he will close, or the order ID will be closed with 100 contracts, and that's it. Okay, this is the already traded amount on this is the already traded number of contracts, and this is what is expected next to be traded. And then the order will refresh, and then we will see 88 and maybe 12. The order will be refreshed, and so on. But he is still confident that the market will trade against him here, and the price is coming up. That's an interesting phenomenon. The only point we don't know is we can conclude that this is an DID or iceberg, and then we can go against it or trade against the iceberg. And if it remains in the book, we can conclude that the price is coming back and trading into 67, for example. The only point we don't exactly know where is the reversal. Where will the price reverse and trade into 67? And sometimes, if the price is really going straight down here into this level, he simply cancels the order, and that's it. What do you want to CL, or what do you want to CR go? Oh, I think the CL contract changed. It looks weird, so Argo, if you're around, what wanted you? What do you wanted to see?
Yeah, and then the other contracts like the ZB. Do you have a ZB also?
Yeah.
Maybe
Let
do
me
you
see.
have something?
We can.
As a CB is quite liquid. So
Where's the ZB? Okay. Yeah, ZB is a great contract. So where I don't see any icebergs right now here. I think hidden behind 1000. We don't. That was an iceberg traded with 1125, but I'm not sure if that wasn't. That wasn't DID, so I can't say. We can say that there's nothing. Let's see. So I don't have soybeans. Let's add soybeans. What is soybeans? That's not Z1. What's the actual contract? ZB, ZS. F2, ZS F2. Needs some time to load. And I'm missing CL as well. That's interesting because I think that contract changed. Energy CL, what is the next contract? CL is F2 as well. F2 as well. I'm loading 5 days of CL, and it takes some time. Okay. Takes some time to recalculate everything. We will see in a few minutes. Okay, it takes time as well here. Oh, what's this? Oh, come on. That's really strange. Okay, that might be something. Not sure if that works. Okay, it's recalculating here. It takes a little bit time to get all the data refreshed. Yeah, but let's watch the gold here. It takes time. So it's creeping up into the 87 level. Still there, the DID is still there. Let's see the ES. We don't see any specials here on the CID, ES, excuse me. It was a pre-high. No, nothing here. It's building a bottom in the VIX as well. It's rising. So that was the next high volume traded into 04. I think that was a what was it? At 3. That was this mentioned. I mentioned this levels before. 04, 01 could be really interesting to watch because this is a high. This is a high resistance area, 47, 1, 3, 4, 1, 2, 3, 4. Good. So I would like to. I have seen it refresh to many more contract into 1,000 or more. Frank, I don't know what you're speaking about. ES or what? I don't know.
I was just saying on the DIDs when you'll see
okay.
them
Okay. Yeah.
and they'll hit another 1,000 or whatever, and you see that number grow to a pretty good size number.
You see what happens right now here with the UV is quite interesting. They added liquidity at 1514. So the 90 is still there, but this is as well a good sign, market sign. It's extremely well market sign to watch because that might be the attractor right now at this point. When we started to discuss the ES, everything was bullish, but what is a little bit more, it was where I am concerned about is that this 1590 is still in the book, very hard in the book. And now, while we are talking and discussing and watching the other instruments, this 1540 came up, and that might be as well an attractor. And you see the ES is now coming back. It's trading lower. Yeah. So that was a next nice sweet spot here at 0304 for a few points. We missed. Yes, I missed at least. Good. So let's do some recap. And let's go through the documentation for a few minutes. It's not much is left here in the documentation, but I think I should stress it more. So we should go through that. Give me a second to find the entry. We talked about the hidden orders, and you know my opinion about the hidden orders, because I think it is they are highly they're highly subjective. That means they can help, they can show us the resistance and support, but it is I would say highly subjective if we can rely on the hidden orders. We can rely on the DIDs. That could be a valid point to build strategies around DIDs, even algo-driven strategies on Bookmap, and that is what we are just examining and researching if this can work. But if you see iceberg on your chart, then keep first in mind, if you are using as eye tracker, then be very cautious, because if you zoom in, you will see a different number than when you zoom out. So it's because of the aggregation. We have chosen a different way because we wanted to see exactly when the iceberg hits a certain price at a certain point, at a certain time. The price at a certain time. Then the iceberg has a certain size. Like here of the chart, it's 150, and when you zoom in, it remains 150. Please keep that in mind when you're working with Bookmap. Bookmap aggregates data. It must aggregate data. That's not a bug. That's simply the necessity. That's the necessity of this market presentation. So the DID conclusion, we have talked about it yesterday. I just want to skip the price dynamics plot. We saw that today in action. It's highly impressive. I know it's hard to, maybe even hard to believe, but watch it. You don't need to trade it necessarily. When you see this more reddish, slide is down, you see this more reddish. That means there's more selling, there's more selling, there's more selling. A little bit more of relief, and then buyers came in, and then there's more selling here, started here. We are measuring the price dynamics based on the market orders hitting the resting liquidity on hit the bid and lift the ask. We haven't, I think it was, who was it, Julas or Chris, I'm not sure, who mentioned that a certain weight should be put in, or should be calculated as well. So I'm not sure if we do that. I don't believe that. But if you have some ideas, please write to support at ttwtrader.com, and we will put it on the to-do list if it's feasible. If it makes sense, we will grab every good idea and realize it in the software.
Walter, Frank, I had a quick question for you. Given the fact that zooming in and out on Bookmap can accentuate the colors, for example, zooming in, you can make that a little bit brighter red than what it really might be. So should the focus really be on the size of the bulge of that line more than the color, because it just depends on how zoomed in you are in or out?
I think it doesn't matter. What we are doing here is simply we are sampling. I mean, the challenge with Bookmap is that Bookmap has or allows certain API accesses. So all these drawings we are doing separately, and we could do that much better, for example, for NT, for NinjaTrader, for Sierra Chart, because their API is quite more open and well documented. So what we are doing here, we are sampling the buyers buying and sellings, and yes, drawing, what's it, this little what is this, little diamonds or whatever. But what you can,
I call them bulges.
Yeah, okay, good. But what you can, and therefore that we have a different, to be very open, we have a different outcome for stocks and cryptos. It does not work with some and most of the stocks, because this is simply a different timing, a different size. We are talking about a different volume, different liquidity, different sizes. So we have optimized that for ES and maybe even NQ. I think someone of you mentioned this week that it doesn't work very perfectly with NQ. It could be because it is a challenge. It is not a fault of Bookmap, but it is a challenge to give to code visual helpers for Bookmap and put them on the chart here. It's much easier to have an idea to realize a curve or whatever here in the sub pane or sub window, sub pane here of the Bookmap. That's much easier because it's straightforward. But if you want to give a little bit more help to the user and do something creative and put it graphically or depict it on the chart, then it becomes really challenging. So far we have a lot of discussion about this, about how to do it graphically. My dream is simply to get rid of all these numbers here and get it more graphically, so to guide you, to give you more calmness, to give you more silence and on the chart. That's the goal. When you zoom in, you will have a higher density. Look here. you will have a higher density of these charts, and what you should look at is this bullets. The bigger the bullet is, or this graphical design here, the darker it is, the higher the volume is. The higher the higher the volume is, and the higher the volume is, we are facing an exhaustion. The market will make a break. You can go against, if you are a trader, counter trader, you can go against it, and sometimes you will get one ticks, few ticks, and sometimes you will get few points out of it. So these bullets, these big bullets here, or this not big, this spikes here, these are simply high volume indications. So you don't theoretically you don't need a subpane. As well, we did it with for the dynamic hidden order plot for the icebergs here, which works extremely well because these are really icebergs. So you know the icebergs does not happen all the time. They happen now and then, and I'm measuring only the native, and then you see, okay, that was a resistance here, there was a resisting iceberg here, that was maybe for sure this no, that was an absorption. That was an iceberg on ESC, that was an iceberg on BIT supporting that, and so on. But it's more challenging to do this for the price dynamics plot. So if you zoom in, you might get a little bit better picture, but because if you see the screen, we should do that in December more consequently, or at least I should do that more consequently, to jump in and to scalp. That's something for scalpers. That means if you're a scalper, then you can get really nicely 1, 2, 3, 4 points out of the market if the market really approve you and support your idea. You see the next scalp is here. So that's really a nice scalping tool because it shows you who is in control, the buyers or sellers. Now you see what happens here. Here's a sweep. So someone starts to sell here. Let's see, just a moment, guys. Let's see whether we can do something here. Nice, yeah. We have a good correlation in the wicks. 886, you see. Someone sold actively 1500 and then 886. That means 2400. That would be a good point. You see how UV is trading against 154T. 154T, that means if they are going to hit 154T, then we will see an inverse reaction of the S. And by the way, Frank, it is the same good example here. You see, this is exhaustion. That was the sweep. And that must be, yes, that's the information. Now you can counter sweeps. I would be very cautious on that because it's simply 50-50. Sometimes it's 50%, sometimes it works and sometimes not. So that's the statistical outcome of sweeps to go counter sweeps. You see here someone, I think the SI tracker is showing a stop run here as well. And you see that here on the chart as well. So yeah, I would like to say it's a kind of your personal trading style, whether you want to scalp and to trade and to see, okay, that's a reddish one, I have to go, that's a greenish, but I would be very cautious. I don't use that because I want to see the trend. I want to see the trend and want to ride the trend. And the trend again, if you remember, high volume traded at 70, that was not a high volume, but you see a nice, very nice divergence trading into this 03, 04. That was an it was a 3 institutional level as well. It doesn't matter 03 or 04, and then it traded further down. It comes very nicely with a UV, but you must be very focused. That's really the bad message today. You have to be focused on that because you want to find this sweet spots. So you have to be focused, and that's the really most demanding part of trading. I don't know whether I answered your question, Frank. If not, then please go ahead. Discuss. Say something.
No, that was it. I was just saying that I focus a little bit more on the size more than I do the color because of the zooming in and out, function can change that colorization a little bit. So I focus more on, I want to see that thing get pretty good size, and if it does, then that tells me, that's where that volume's coming in at.
Good point. Yeah, everyone has maybe his own idea how to trade it, but it's really reliable because you see buyers and you see sellers, and that might lead. You see as example here on this slide here, it gives liquidity. It is liquidity, and then the buyers kicks in here, or started to kick in here. That means you have a nice support. And the buyers started to buy slowly to buy. When was it? It was in the evening. That was 12:25 Eastern time or 12:20 Eastern time. That's a good sign. That's really a good combination to say, okay, I'm long. I'm trying along here. So the color is variable, and the sizes of the plot are as well variable, and they are indicating price sensitivity. Price sensitivity means that the price is going up or price is going down. As you mentioned, you see this big bullet here as well. Two green spikes of icebergs here. That means exhaustion and icebergs are supporting this level here, as well as liquidity. These are the sweet spots, and I wish we could automate these combinations to give us an alert when it happens, so you can step away from your office or your workspace or your screens and then be alerted when that happens, because this is really a good sweet spot and good try to go long here. So you have that. You have an exhaustion in the sell. You have supportive icebergs here. This two green peaks on the plot here. And that means you have liquidity, and it started to go green. And if you are in a trade, then simply manage the trade. See where the next liquidity is at 55, for example. So light colors means less buying or selling activity. Strong highlighted colors means higher buying or selling activity. And strong highlighted plots means high volume traded. So as we discussed with Frank here in the room, and price action comes to a pause on the reversal. This is always about exhaustion. Doesn't matter how do you display that, as a sweep, as a volume spike in the price dynamics plot. An exhaustion means high volume traded, and high volume means simply if the market is not extreme bullish or if the market is not extreme bearish, then it means it comes to a stop. It comes to a break, and this break means pullback. And if the price is really market is bullish, then it will go retrace maybe 1-2 points and then go back and trade higher. We consider that. So
Brad, another quick question for you. With regards to the price dynamics and then the hidden order plots underneath it, has your team looked at how often that scenario plays out where you get that exhaustion and you get those hidden orders that support that? Is it much like how you have on one of your screens, finished business, where that's a little bit more of a rare occurrence, where it, comes back. And I was just curious how often that plot works
That's
out.
an excellent idea. We have not, because we are extremely busy to bring the version 3 as a yes, with sound alerts and all this stuff to the market as an update. But that's an excellent idea, Frank. That's a really excellent idea. To get in combination, to find combinations. We have to let me notice that. That's really an excellent idea. Okay, I will take this idea with me. I'm not sure whether we can whether we can do that. I'm not sure. I'm not a developer, but that's an excellent idea to give let me say a combinated combination or combinated alert when that happens. That's what you are suggesting, I suppose.
Yeah, exactly. And granted, I don't know how many times it happens, and I don't know how many times it will go that way and then turn right back around and go against you, because you've got other factors in the market, like what's options, etc. But I would just be curious to see how many times that combination and vice versa, right? I mean, it's going up, you get a big exhaustion green on the upside, and all of a sudden you see a bunch of hidden.
We can have a fast check now. Let me open the Bookmap. Yes, let us have a fast check right now. So not here, but for example here we have a nice idea. Yeah, that was nothing really special. That was an iceberg. Let's have a look here today. That's the opposite one here. You see that happened. Let me go back to the low of the day here. It's greenish. Then that was on an ask. That was this one, 170.
So you can see where it actually gave you a sell, a buy up, and then of course a hidden order popped up that was a pretty good size, and you got a little bit of a drop off in price, but it wasn't very significant, because more than likely, if you went back and looked, I know for a fact, if you look at the VXX or the VXY, getting off all the alphabet soup of acronyms all mixed together. But anyway, if you go back during that time, you'll see that it was starting to show exhaustion for that instrument, and so then of course it starts to head down. ES is going to start going back up.
Yeah, that's a quite interesting point here, because the combination of icebergs and exhaustion might give us clue where the market is going to trend to. So we have an iceberg here, we have another iceberg here. That was an exhaustion. So they are, in hindsight we can say they stopped the market here, although I would say it's an exhausted point here as well. We have an iceberg here at that side, or this top here. Let me go further here, whether we see something. It's that, therefore, I mean, I can draw all the icebergs on the chart. I don't want to do so right now. I mean, you can do that for yourself here. You can see all these icebergs and you see the market is going up and they are simply hitting the ask. So what is the meaning? Maybe the liquidity providing, whatever. That's really... So I would, here for example, I would expect to an iceberg on ask. Iceberg on ask would confirm that the market is trading down or will most likely trade down, but you see these signals are most of the time contradictive. So we have a sell-off here and bottom iceberg here.
Yeah, I would be curious to see if you could match that up with one of those institutional lines where it's coming off and it's either.
Yeah, the point is I have no access to the institutional line. I have only I don't know how to do that because that's I don't know how to do it. Look here, we have a greenish, that means exhaustion that they are hitting, but the reversal is only 1 point or what, 2 points. No.
Small amount, exactly. So it's just an observation. I don't know how valid it is, but it's just
I don't know either, because I would like when I see this strong up move, that means you see how this graph is rising. That means strong. That is simply strong volume. By the way, you know, maybe you recall the discussion yesterday. Where is it? Oh, okay, just a moment. The discussion yesterday we have based on this, when the market goes straight up, so maybe 90 degrees up, it's not 90, but 80 degrees up, then that's a strong up move, and this strong up move will come to a break, will come to a pause, because it goes maybe 4 or 5 points and then it stalls. And that is valid for every single instrument. It doesn't matter what. Let's see, gold. No. Let's see, gold. Yeah, you have, look here. You have literally the absolute same behavior, and we can conclude the same. We make the same conclusions. Someone is selling, sweeps. Why? I don't know why. And the market goes down very steep, and as well very steep up again. And that means if they coming to a break, to pause, when they traded. What is 56, 54 into 66, so 10 points, 12 points here. That means this steepness must be simply corrected, or at least the market goes in a sideways move, and we can read out of the steepness, which is also indicated by the price dynamics. This diamonds or this spikes here are exactly indicated this exaggeration in the market, and every exaggeration in the market leads to a break. Okay, let's go back.
Walter, speaking of some enhancements, and just another idea, just to give you. I mean, you got a pretty capable team, right, to make these things. So why can't you think of a correlation flag? For example, what I mean is, right now, you're in ES. If we have a thing that is with the wings, and why don't you show on the ES?
We have. Excuse me. I'm laughing because that's exactly what we are thinking about to do so. Because that's really that will be absolutely awesome to. That would be absolutely awesome to have that correlations for NQ and for ES, for example. The point is, yes, we are thinking about that. Not really, don't know how to realize, because we can't use simply the data feed from let's say Rithmic or whatever, and then distribute or build in the the VIX, the UV and VXX, and into how to say, into a correlated indicator or correlation or whatever. That's really a point we are thinking about how to do that, because we are not allowed to use external data and then put them on the chart. I mean, Bookmap has a correlation tracker. Bookmap has a correlation tracker.
Yeah, that's not good. Yeah, that's not good.
Yeah, but this is
Not very
really
good.
something I'm not happy with. Let's see how it displays. Did I?
Oh, it's thinking. Oh, it's thinking.
It's thinking, yeah. I'm not sure if this is the correlation tracker or maybe CL. Where's CL here? CL. Where is it? Do you see it? I don't see it. Dotted thick line. Color UX, UV. I have the, yes, it's there. Yeah, you see the problems or some of or the issues we have here with this correlations tracker with Bookmap. It's not really helpful, as you mentioned, so because when we are trading, yeah, I never was happy with the correlation function in Bookmap, so it's not, you can do that, but it's not the best way. I don't know if it helps us. So we will, if we want to know what to do here, you see this dotted lines here. Well, what happens right now, you have to maybe zoom in to see that. And I don't have any manipulation possibilities of this correlation tracker. So yeah, Srini, we are thinking about that, really. Believe me, we are thinking about that because it would be amazing to see a correlation based on that what we discovered and what we see every single day, because it works every single day. So therefore, I mean, it is hard on some days, but if it's dropping down, it's simply going up. It's simply going up. It doesn't matter what you have, or whether you have sweeps, whether you have icebergs, whether you have stop runs or volume spikes or whatever you have. As long as the market trend, if the volatility trends down, the market is up. The only genius conclusion we did today was to recognize that we have had this bunch of volume here, a huge volume traded, indicated by volume spikes, by sweeps, and so on. There some guys have been buying here, and that was the conclusion. Maybe you remember that I said this market is totally bullish, not because it took time here, and that's the hard time to sit around and find a spot to trade, but simply because this phenomenon here. That was the reason why the market found its bottom here. and then it's trading up. It took time from 30, half an hour, 40 minutes, 50 minutes, that's okay. So, and then the market lifts off. And the phenomenon on this case is, if you understand Elliott waves, is simply the wave 3, you know. The wave 3 was in, the idea from Mr. Elliott was to say in the wave 3, the last trader on this planet realizes that the market is going up, or the market is selling off. So that's the characteristic of wave 3 in the Elliott waves, if you know what I'm talking about. And that's the same phenomenon here. You have a high volume, you see that on the bar here, high volume traded, divergences, and then the market goes simply sideways for at least 30 minutes, 20-30 minutes, and then it starts to trend. During that time, most of the traders are aware, okay guys, the market is going up, and then they are joining the game and trading up. That's the reason why the market needs, because this move here scared a shit of everyone here, you know. If you are short and then you sold and you see this big move, and most of the retail trader are thinking, okay, that's going further down. Then they're jumping on the train here, jumping here on the move, and they get caught because the move is going nowhere, and then their stops are hit. Maybe the stops are hit here, and then the price goes against. If the sell stop is hit, the up move accelerates, of course, and then market accumulation starts here. My idea was to see an accumulation around 70, where the kind of double bottom, and then a nice divergence in the VIX here, in the VIXs, in the volatility indices, and that would be a perfect long trade here after 70, because mostly it grinds up very slowly, but then it starts to lift off. And when you're in, let me allow to speak in Mr. Elliott wording, when you are in a wave 3, that's this one, then it goes very fast. You see how fast it was. Again, if you watch them here, it goes sideways here until this, and then it starts up, slows down. Then we have the what is this? That doesn't work. So doesn't work that way. Then we have an pullback, and maybe now the wave 5 is coming into 47.10. But yes, Srini, that's a good point. The question is now how to realize, how to do that without breaking any laws. how to find a solution for that. That's the point. Okay, let's go back to the documentation. So price dynamic, we talked about that. There are excellent and subtle signals. I would say even subtle signals, because they are there. They are relying on the order book. As well tested with liquid futures like ES, not applicable for stocks and crypto. So we'll be very cautious. If you're trading stocks, switch them off. If you have the MVP, it's a little bit more reliable than the price dynamics. So far in this version, it might be changed, or we maybe find another solution in the next releases. Then we will add it. You will have the chance to test it again with stocks. But at the moment, I'm saying very clear that it's be very cautious with stock, and we haven't, or at least I haven't tested with cryptos. So guys, my intention is because to give you more back, than you paid me for this 4 days. I appreciate your valuation and that you value my work in this case, but I would like to give you more back than you paid for this seminar. One of the secrets of the market secrets is a rare pattern. It's a rare pattern. It's a rare phenomenon. And if you're watching Bookmap, and if you have the sense and you watch it and you focus on your seed, it is nearly a 100% statistic. It's a 100% trade. It's really a free lunch if you spot it and if it happens on chart. It doesn't happen, it doesn't happen every day, especially now when the liquidity is skewed. From my point of view, the liquidity in the US is skewed. I'm not sure. We are not sure, and we discussed it in the Discord room as well and in the team. What is the reason that this liquidity is more? It's harder to see, and it might be probably because the market makers see that more and more people are using a heat map. Bookmap is not the only one. You have a heat map on NinjaTrader. You have a heat map on Sierra. You can use the MZ pack. It has its own heat map. I know that Matt Zimberg from Optimus Future has an I forgot the name of his product, Optimus Flow, and he sold it under other name. It doesn't matter. It has a heat map as well, and I'm sure there are several other solutions out there because the heat map is, let me say, yes, it's fashioned to have a heat map on the chart. The point is you have to understand what a heat map is saying, and therefore it's important. That's the other side of the coin. That's the other side of the coin. So business done pattern. I mean, that might be something strange or new to you. I'm not sure, but for some of you, of course, that means it has a high statistical relevance for an extremely good risk-reward ratio and is extremely successful. We are examining in that direction as well, but it is really hard to find a description for the business. I call it the business done pattern is a name I gave, I created for this kind of pattern. It's quite clear what happens. So see the chart here. The price approaches a liquidity level. That's nothing special. That happens every day. But then the price starts to drop and trades back into next levels. And the interesting point is, though, that what you don't see on chart. So this guy at this level, what it is, 61 for example, cancel the liquidity when the price moves away of this liquidity. Yeah, you see that? And then suddenly the price finds a support and buyers comes back, and then they are trading against this level again. And in between those levels here at 61, there is nothing. It's an empty, let me say it's an empty space. So the business was done here. He finished this business, went away to grab a coffee, came back. He came back and realized, there's another liquidity here. There's another the price is coming against me. I have to add liquidity here. Excuse me. He's realizing that the price is coming back and he adds liquidity here. That's resistance. That's a very strong indication of resistance. I really love this kind of pattern because it gives me gives me every time some points back. Because if you are shorting this, then in this case, it went back. I don't have don't have added, or I have added. I'm not sure. The continuation of this move, the move went down here into the 53. So if you're short 50, 58, 56, 57, whatever here, and the stop is a little bit, in this case, a little bit higher, 58. It must be at 61. So you have at least 3-point stop here. And it's a little bit harder to see if the price bounces or trades at 60. And that's a little bit of art of trading, so to play with the entry. But if you see this kind of patterns, you can be sure that at that point, the first point, the liquidity repels the price. And price, the first one, it repels here. Then the second one will protect the levels, the price at 60, and repels, and then the price starts to trade lower. The characteristics of this pattern is liquidity is cancelled when price was defended. The blank liquidity area is long-term high liquidity price levels. That means that liquidity is cancelled and they don't expect the price trading back into these price areas here. So the break of this liquidity is important. You must see that. You should see that to be very sure that this is maybe, as I call it, business done pattern. You are free to call it whatever you want. This is nothing copyright or protected or whatever, but I think because I saw, okay, they have done the business, they stepped away from their screens and then came back and realized the price is coming back, added again liquidity to protect the liquidity to trade into 60 or 61 or higher, and then the price yes, they repel the price here, and then that is a very excellent, yes, it's an excellent opportunity to go against the price here, to sell. I mean, we see that on the opposite side as well, on the other side, but I think the principle is very clear, or should be clear here. So market starts to buy, comes back, and liquidity added again, and second defense of this price is a very nice sell. Short in this case, on the other side, opposite side, it's a long. Business done pattern, ladies and gentlemen, please have a look. Keep in mind when it happens.
Walter, so to specify it, so the business done pattern, one of the thing is I have to look into it is that the levels are being pulled, right? So yeah, exactly in that square. So that's one of the three ranks, right? So the level and being added again. Okay.
You must see that, because at that moment when the price is trading into 60, we do not know what happens next. We can't force in the future. You know the whole story. No one of us can do that. But when we see this liquidity, emptiness and liquidity again, that's really rare pattern, and it's fantastic to see that. I promise you. You don't need to trade, because maybe you need more confidence to trade it. But when you see that, you will be amazed how fantastic it works.
Hey Walter, like a bit like which happened today in S&P in the ES. I'm sorry, from 18. I'm speaking European time. 1846 until 1913. You see the same V. V developing, and then it goes back into liquidity.
Yes. It's, you know what. Yeah, you are right. If you are right, yeah, that's the point. That could be a very nice pattern. It's not perfect, but it alerts you. It gives you the idea that they are trying to protect 4710. And I've got today the how to say, the institutional levels, and the predicted high was at 4707, I think, 4710. I don't know how they how they make that. I can't explain that. I can't say that. But when you see that, that's exactly what I'm talking about. It's not a perfect one. But business is done here. The price is moved a little bit earlier away. Let me see, 3 or 10, 7 points. That's a little bit too much. It's not perfect. And you see by what I'm talking about, the obscuring of liquidity, that the obscuring of liquidity happens because since March 2021, we see this liquidity around the best bid offer here. The liquidity around the best bid offer. You see that? This is exactly 92, around 10 points. That means 4 points on the ask and 4 points on the bid side. You see how they are trying to obscure. It goes away when we have announcements or someone is speaking, or we see sweeps. That's a very short time where this liquidity disappears. Not here, but you will see that it appears for a very short time, then it comes back immediately. On some days you will see that it disappears for 1, 2, 3, 5 minutes, and then it comes back again. That's what it's really disturbing, because you don't see it's hard to see what happens on the distant price levels. So we have a clear business done pattern here, but however, this is a little bit disclosed by this liquidity channel, whatever.
Walter, just more specific. So where do you enter in this business done? Where do you recommend us to enter? Enter the trade.
Yeah.
Enter the trade.
I'm taking the second leg here.
You take the second leg. You take the second leg when it starts to show the.
The question is now, it's not exactly. That means what you see here is a kind of exhaustion in the move. You see they're traded down into this support and then coming back, and you see the angle of the move. It's let me say 45 degrees, roughly 45 degrees here. Yes. And then they simply don't have the power at, let me say, 58, 59 to trade higher. And then when they are entering 58 or 59, then this liquidity adds again and this liquidity is pressing the price down. So I'm always take the second leg when I see the pattern, because then when I see that, I know that's a business done pattern. The question then, the next question is where to enter, maybe 58, 57, but the stop must be a little bit more away, so you have a higher risk here. But that's the entry, the second leg, not the first one. I mean, if you see something valuable and which appeals you here in the first trade into the liquidity, maybe this institutional levels, whatever you might have on your chart, then you can of course go short here. That's not the point. But what I wanted to say is this pattern is highly reliable. It's really reliable, and we are working to make it, to test it based on our data. But it's extremely hard. You can measure icebergs because you have a clear number. You have an iceberg, you have an order ID, you have you see that order refreshing, and you know that's an iceberg. That are very clear parameters. So, but in this case, these parameters are more hard to observe, to describe. We as human beings, we can individuals, we can describe it because our brain recognize that. So as we see faces, okay, that's a business done. But it's more hard for the machine, for the PC, or for the algo to recognize this pattern. I just want to add it because it's really, guys, it's really, really valuable for every one of us. I talked,
Well, one more quick question. Can you go previous chart, please?
Yes. Since you are a big
fan of institutional levels, it seems to me, do you add more relevance then when these institutional levels cluster, like at the 461 level, indeed, where the
let me say that way, Yves. I became a fan because when I met these guys, I have several friends all over the world. Then I was extremely skeptical. We have what you name it. We have thousands of lines, It doesn't matter. We have spot gamma, we have volume profile lines, we have unfinished auctions, we have finished auctions, we have yesterday VPOCs and today's POCs. We have literally thousands of lines. And when I started to watch this stuff, I couldn't believe. So I became a fan because I see that they are working every single day, and that's simply amazing. And therefore, when I see something like that, you see that that's nothing hindsight. That's all that was in the book. When I get them in my time here, maybe if I'm around, if I post them on Discord, at least half an hour before they open. So that was the
numbers you post as daily prep numbers. Those are the institutional levels.
Yes, I just don't want to disclose. I mean, that's not my invention here. This is not what I have a control of. Maybe I'm looking to get some kind, maybe a franchise of this level. So to make a subscription to you for NQ and ES, and maybe they have another ones. For other maybe instruments, but I don't have the control of them. So either when I get them, I share them, but I can't do anything with them. So it would be great to have them. My idea is to have an add-on for Bookmap where this institution level will come in, and it will be drawn automatically on this. On Bookmap, as well as NinjaTrader, as well as Sierra Chart, and so on. But at the moment, nothing. So I post them in the room as well on Twitter, and you can simply watch them. I mean, it's up to you. You can put them on the chart. If you have the trade finder, use the price alerts and to see if they work or not. You will see most of the day they are working like a rail track here. You see. Going down here. There's nothing. There's really nothing. Look here. Okay, we have a pre-high here, but the spot gamma levels are far away, where the price turns. I take them.
A column from you with the institutional levels, but I can't seem to manage it. So I will ask you to do a team viewer with me to install that column.
Yeah, of course I couldn't. It's really easy. But I give you a link. It's really easy to do so. You see that here on this chart. On that chart, you can use any chart you want. I mean, I'm not deleting them. They are all in the room. So they have, I would say, my estimation is they have a statistical probability which is greater than 70%. I have never tested them or back tested or forward tested them. Institutional levels are based on options and market relevant levels. So they are simply using these levels like maybe Spot Gamma is using or Cem Karsam is using. By the way, Cem Karsam is using nearly the same levels for you, just for this. That's an info just for you, but he's posting them quite lately, so maybe 2 hours after the open. Institutional levels are based on options and market relevant levels, whatever market relevant means. Institutional levels are courtesy of institutional associates I have, and it seems that algos are trading around these levels. I'm just voluntarily sharing them for US Future only. I have them as well for NQ. And they are available pre-market, that's important. And there is no connection to Spot Gamma if you ask. Can be added to Cloud Nodes. That's extremely easy to do so, Eve. I'm sure you can do that right now. Give me the second here. You have to insert a Cloud Nodes column.
Insert a column.
Then add Cloud Nodes. And then I'm copying the link here in the chat.
Okay.
And that's it.
Docs Google. Yeah, in the chat,
So you just simply open an insert column, add notes, Cloud Notes, and copy the link in the Cloud Notes URL here in this field. That's it.
All right.
I meant that this
All right.
all.
Thank you.
Keep in mind, this is all voluntarily. So Chuck from our room is doing that. That was done by Doug, of course. Yes, it was done by Doug, and he needs a break, as we all need a break here of trading and leading the room and commenting and answering and doing live trading. And now Chuck is doing that, and based on the institution level, based on the Google Docs, it's a CSV line, and it's voluntary. When I after our live trading week in December, I will take a break, and I'm sure I want to switch on any chart here on my screen, and I won't post them as well as when I'm on holiday. A lot of people ask how to continue the service. I don't know. Maybe we should find a way how to do so. I'm not sure how to manage that, because it's not something I can control. Use them, check them, play around with them, whatever you want. You will see that most of the days they are quite interesting to watch and to see, and you will see that price seeks these levels. Why? I don't know. My suggestion is that they are simply, the big institutions are simply firing their algos around, adding liquidity and canceling liquidity around these levels, and that works nearly every day. Just as command, I can't add any more to this institution levels. At the end of the documentation, I have tried to do to present or to do a so-called cheat sheet. Frank, the Batman pattern. Good, why not? Good point. My view, and today it was a little bit chaotic at the beginning, is that I'm preparing, and next in December, when we have this trading week, I will start, and we should start simply, and that's my suggestion, to see where's liquidity. Do we have a clear picture of the market, or do we have not a clear picture of the market? That's my idea. So first of all, do we see liquidity up and down, or is the liquidity in between of the instrument you are trading? That means NQ, CL, gold, stocks. By the way, as I mentioned, I think stocks are a little bit more easier to trade than futures, because when you see Apple, Microsoft, and others really very liquid stocks, you see a very an excellent liquidity areas where the price is most likely to trade into. So we need a broader market view to understand what is the ADD after the beginning. And then at the session start, I'm always watching the SPY, the WIX, and the VXXUV, and the bonds. I'm watching the ADD and ticks. And what I'm using then is simply Bookmap to find sweet spots, to understand what, for example, the daily levels, by that I mean the institution levels. What are the most important daily levels? The price dynamics at the beginning, who is leading, that might be a good indication, long or short. Dynamic hidden order plot, yes, that's, we discussed the not the issues, but how reliable they are. If the market is trending in very clear, like yesterday, that was a very clear sell-off, and you see the VIX spiked up, then simply joining the market without asking, bid ask, and let the market go, and I hope you get 4, 5, 6 points out. Today I added volume spikes in the updated documentation at page 96, 97, and 98. And what we discussed today is the low of 70, where we see this huge volume spike accompanied by sweeps. And you remember I mentioned that's the reason why the market will lift off then from this level here. The ID development as well. That means I have to rewrite that. The ID belongs to the dynamic hidden order and the sweeps. I'm not sure how to value the sweeps when we see the big player intentions. It's quite interesting to watch them. But what can we conclude out of this development? What is the result for us out of this development? This is a question. This is an ongoing question we should discuss then every time we are meeting or we come together, or maybe we are in a pub and restaurant and talking about the sweeps. That might be as well be a philosophical discussion as like with as the same one as with icebergs. Of what value are icebergs? We should really discuss it and think about that. How do they help us to make money? I mean, we are here to make money, and not to discuss theoretical thesis or whatever. And the question is, what do icebergs contribute to our success? As well, what do sweeps contribute to our success? I mentioned that sweeps can be traded as a counter trade, or we maybe will introduce these B lines, these breakout lines, to give an idea when a sweep happens, in which direction we should have a look for a successful trade, either downside when it breaks downside or upside. But that's all simply, it's not a clear picture like this. As Frank mentioned, the Batman's wing, for example, or the business done. Business done is extremely clear. You have not to. We don't need to discuss it. But with sweeps and icebergs, we will have an ongoing discussion on how they are helpful, how they can support us in making money. That's the Soleil goal and goal of trading. We want everyone of us want to be successful, profitable in the long run, not just gambling, but in the long run. If you, my idea is why I'm doing that is, if I stop trading today because I want to take take 1 year off of my life and joining and doing anything else, when I come back the year after, I'm sure I can use this knowledge and start again, not from scratch, but I can start again, because the dynamics, the principles, and all that what we spoke about this week will never change. The dome will never change. The order book will never change. The auction will never change. The liquidity will never change, because we need it. As well, yes, the price dynamic, who hit the bid and who is lifting the offer, will never change. So there are some undeniable characteristics of the market that will never change. And when we understand that, we are simply coming back and starting to trade again, and you will see there's nothing different. The only difference is always what you are trading, what are you for personality? Are you someone who is really patient and can sit around for hours and watch the treasuries, for example, developing? Are you that patient to do so? Then maybe the right instrument might be the ZB, for example, or ZN, or ZF, for example. That might be the right instrument, because if you are in at 29 because that was a nice big iceberg, then you are buying this 29 and it goes up slowly into 61.02, that means 30 to 29, 3 points, 5 points, maximum 5 points. You get 5 points out of this market. But 1 point is $32. Oh no, fractal, excuse me. This is our fractals. Fractal is $32. So do you mean you make 5 ticks, and it's not 5 ticks, let me say 5 ticks or 5 points. It means 5 by 32 means $150, or a little bit more. So if you are extremely patient, but the return is you have nearly no slippage. You have you can always buy or always sell your your contract. That's the beauty of the treasuries, or even if you are trading soybeans, it's as well. I think 1 point in soybeans is as well $50 here. Very clear moves. Interesting to trade. You don't need necessarily, Myron, you don't need necessarily to trade NQ. If you are feeling good trading soybeans, why not? Or treasuries, why not? It depends really on the personality. I know a lot of friend of mine who are saying, oh, they are trading cryptos. I have to trade cryptos. And then they are burning their fingers very, very fast. Because cryptos are extremely thin instruments. Or we have to trade the DEX because it's fashioned. I don't know why, but maybe it's fashioned to trade DEX. I have a different opinion, because I'm someone who can concentrate for 2 or 3 hours sitting on the front of the chart. Then I have to do anything else, because that's my maximum of my concentration is reached then. And the point is, maybe the ES is the best instrument for the first 3 hours, at least for myself. And therefore I'm sticking with the DS. If you think you need something fast, then you're going to NQ, you are trading CL. Russell, we haven't talked about Russell here. Again, thin instruments are quite quicker than the medium instruments, although when we talk about volume and liquidity for ES, that changed dramatically. I remember the times when the ES has had 500 and 600 contracts on each price level. That was, I don't know, 3, 4, 5 years ago. Then it took simply time, and you have to be very patient. You have to be very patient, waiting for the yes, and hopefully get 5 points out of the TS of the yes. Okay, guys, I think I'm finished with the presentation. Oh, there's another cheat sheet. I mean, you can build your own. That's simply an idea, an offer to you. That's an offer to you to make your own trading sheets. Maybe you have it in your mind, in your head. You don't need to write down, but that's an idea what you should look at. Liquidity is always the first point you have to look. Even in stocks, I would watch the broader market. And look for sweet spots. They are different for stocks. You have the price dynamics, you have the market volume pro, you have the trading into liquidity levels. Volume spikes are quite helpful. Give it a try if you have the, let me find the Bookmap. If you are trading, let me see, where's Apple? For example, one example. Yeah. Oh, it was Apple. I think it have been the FANGs who to push the price up in the US as well. So if you are trading stocks, I think from my point of view, stocks are, I wouldn't say easier, but more, how to say, better visible, or better, has a better liquidity visualization and visibility than ES. The first impression was to buy Apple, wasn't it? I mean, you can't sell Apple.
Yeah, I mean liquidity up. Yeah, I mean liquidity up.
Absolutely, yeah. You can't sell Apple. That's impossible. At least not today. I'm talking about today. Let's see the Tesla.
Oops.
Oh, what happened here? I mean, Mr. Musk is selling. Look here, the price dynamics are not reliable here in the for stocks. So switch it off. Let's go to the beginning. Come on. Move, 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 move. When we look at Tesla at the beginning, yeah, we have, that's a little bit more difficult than Apple today. But you know, for every single stock, you will find reliable, good pattern. I would rely for stocks when I'm trading them with options based on the liquidity. So, and maybe, not maybe, but I would use also this volume spikes, which indicates an exhaustion. It's Tesla was quite hurt. Either you go down or you go up. So the question is where to join, what to make here. That's a real challenge, yes. But you have as well. You have as well. Either you know what to do, what you want to do, or you don't know, and you see 1120 and you see 1090. These are the first. This is the first you see on your chart when Tesla or when the market starts to trade. If you're not sure what to do, if you're really not sure what to do, wait. That's always a good a good advice. So if you don't know what to do, simply wait. Simply wait. Don't rush into a trade or don't do anything here. And then see how the instrument or the stock or whatever you're trading behaves when it trades into liquidity. That's the second best advice I can give. If it starts that way, if you have let me say two extremes. I mean by extreme as well, if you have two liquidity levels like here in Tesla, and you don't know what to do, wait until the price hits liquidity, and then maybe that would be a good point if you're buying options, buying a call here at 90. And hoping then for 1110 here, which worked. But mind as well the time, and it surges up or went up here, but in very, very long time. That was not excitement buying Tesla. It was not excitement. Again, liquidity hits the liquidity, and then I think this disaster started. I mean, we are talking hindsight here, guys. That's easy. But what I wanted to say, even if you are not talking hindsight, look for liquidity. Where is the liquidity in stocks? Where is the liquidity in stocks? And it's much, no, it's not much. It's absolutely clear. Let's see Microsoft. Ah, come on. I wanted to show you how to adjust it. Yeah, that's. Oh no, it came up. It came up after the open, half an hour out after the open. When we start, we see that this on the screen and if it trends higher, maybe a breakout into this liquidity, in the next liquidity, and 40.40, maybe 41, not sure, is trading then, and then you see this liquidity coming up, then you are alerted to say, okay, I'm very cautious with my longs here, although it worked extremely well here. Yeah, now it becomes clear. Next liquidity here, and that's the next level. So what I wanted to point to is that stocks are quite, yes, from my point of view, it's the picture might, or is at the beginning, is very clear. You don't have this, you see this noise. What I'm saying, that's noise here. This liquidity channel. You don't have it. The interesting point when I see Microsoft right now, and I see this extreme high liquidity, this are 45,112 contracts sitting at 337.20 for 45,000 contracts, a huge amount. Now Microsoft is trading at 41.37. Might be a nice trade into 37, but, and that's the correlations I'm watching is, if Microsoft is trading into 37, then you can be sure that Nasdaq is coming down, and if the Nasdaq is coming down, then ES will be trading as well lower. Let me have a look at Apple, if it's something similar in Apple. No, there's nothing. There's a high resistance areas at 160, 157, 58, 800,000 contracts. That's the accumulated value here. 800,000 contracts, 500,000 contracts. That might be a kind of resistance, but there's nothing on the down, nothing significant on the downside. 143,000 contracts, 135, but it's far away. So 110,000, 120,000, 545. So nothing significant on Apple, but on Microsoft, and Tesla is as well weak. And this is for sure the reason why as well the ES is dropped down here. Excuse me. I don't know. Someone wanted to add something. I thought someone wanted to say anything, something. Okay, guys, I'm done with my presentation, and we have had 4 exciting days, and we will have 5 more exciting days in trading. And my suggestion, I think, let me say that it was a little bit chaotic at the beginning. So the good trades we could have taken were a little bit more, were suppressed by the noise we have had at the beginning. So therefore, I'm really cautious with live trading. Not cautious, but it's really demanding, because when we are trading, I think we should focus on trades, and then taking the trade we understand, and we can where we can control the risk. That's at least my point. I don't want to be chased simply because someone wants to go long or someone wants to go short. We will have my invitation's there. I will send out the invitation and will as well block the times for this week of December 13. The only exception is if something happens. So I don't know, sickness or whatever, Corona is still on the plan here as well in Europe. I don't know how the situation in the US is. And if something happens, I will inform you. But on the other side, I would like to have you all in live trading in the week of December the 13th until December 17th. And then I will send strict behavior rules, like be focused. We can discuss questions after our trade, or we can take a time, for example, 11 to 12 to answer the questions and to discuss what is really important. And that's the point. This week was the intention to trade if we can trade, or we find sweet spots to be focused and see. Everyone sees the market with his everyone spots and understand the market with his own eyes. Therefore my point was to say, okay, do a detox week with your settings. Put only, in case you are trading ES, I just can speak only for ES for you guys. Put the SPY, the week VIX, VXX, UVX, and the bonds on your chart, and then I think it makes sense, because you will be more. You will be more. I'm missing the word right now. You will get more sensitive. You will be more sensitive. You will become more sensitive for the market. You know, and understand that we have to. What I'm trying to resist is we are, when the market moves in one direction, we want to be in. That's a possibility if you want to scalp, for example. Therefore, for those of you who are scalping, you have a look at the price dynamics. It's extremely important. It's extremely helpful. You will mostly get out of few ticks, few points, if the market approves and the market goes in your direction. It's highly possible. My intention is to get 5, 6, 7 points out of the market, maybe 10. And as I mentioned, I would like to enjoy my life. That's my goal. If you are trying to resist and watch only what you see on the charts, without having any indicators, then that makes you a little bit more sensitive for the market. I know we need a RSI. I know we need a moving averages. I know we need a volume profile. We need a POC. We need everything. I know that. And I'm not saying you shouldn't do that, but I'm saying take your time, allow you 1 week simply with these indicators and see what happens with you. What is this thing doing with yourself? Does it help or not? If not, then come back and you find your own way. Just to make a little bit more sensitive for this kind of trading, because as you can see, I mean, it's against hindsight. We have nice divergences here as well, and the bond starts to drop off here, or started to drop off here. We have to be focused on that. Yeah, Frank, that's a probability. The intention of this week was to build to make a foundation what the market is really doing. My ideas, and I'm trying to tell, is not to guess, not to speculate, because I see that in every single room where IMM, it doesn't matter what room, what kind of room it is. You have 100 people and you have 100 different opinions of what the market can do. And I think we have few facts where we can lean on, and we should use these facts to understand what the market is doing. And the market is not, it's not working on its own. That what we see in NQ, what we see in Russell, what we see in gold and other, and ES, for example, depends on the correlated markets. This is tightly integrated. This is extremely tightly integrated, and into this whole system. It's tightly integrated, very hard integrated, and I would motivate you to try to see what the market is doing, and then to go your way. Okay, any questions? Let's discuss. Let's take the final minutes here to discuss what you want, what you what you are missing, or what we should add in December.
Are we meeting on a boat? Are we meeting on a boat like the guy you presented, the DJ you presented on the sailboat?
What? Sorry.
Are we meeting at the sailing boat?
Yeah. We are meeting in Florida. I will meet a yes. I will meet. I will not. I will rent. Oh no, guys! Better. We should buy a big yacht and then taking this yacht to go to Florida or Caribbean, and then make this seminar or trading in person, working for 3 hours a day, and then enjoying the day with a Cuba Libre or mojito or whatever. That's the plan. That's the plan.
That's a sound plan. That's
really the plan. So if you will join me, I mean, Chiara, no, that's not Chiara, sorry. You are in Mexico, so far I know. Great, Alexander. Okay, you can come over to Florida and enjoy the life there, and sun and sea and everything what we can do. But I promise you can do it on your own. Let's see how far I can help you, and then I hope you will get you will get some ideas how to integrate this market view into your own personal trading. That would be the greatest to do. That would be absolutely great to understand that. So let's spend the next minute for discussion. If you have something to discuss, or you have ideas. Otherwise, I would like to come to an end. I apologize for the sweep discussion, but for the sweep confusion. I will change the video of the first day based on the new knowledge. I will cut it, and I will cut out the wrong statements about the sweep, or I will speak over again, so that you, if you want to come back and go through the first 4 hours on Monday, you will get a little bit something different content. And that's it from my side.
Walter, this is Frank again. I just want to say this has been very helpful. I really appreciate everything that you've done, and I think everybody in this room appreciates that. So good job. And the thing that I've taken away from it a lot is the utilizing BXX and BXY a little bit better than what I had done in the past. And one thing that I look for now, based off of kind of what I've learned from this, is looking at that the price dynamics, looking for exhaustion on those volatility indicators or volatility instruments, and then trade the ES off of that. it can be, because this morning, for example, it started to show a buying exhaustion starting at around about 9:15, and then we got just continued kind of steady buy, and then it started selling off at around 9:21, 9:22. Once it started selling off, ES started heading up, and putting those two together is really beneficial. So
thank you, Frank. So we stay in contact as well. Every one of you, Chris as well, if you're around, not sure, but anywhere who wants to, I'm here. So to answer your question, our team is extremely helpful, and we are happy about any ideas you might have. Please understand that the team is small, and we don't have. Yes, the team is small, but it's gold. The team is small, but it's gold, and we appreciate every idea you have in regard to the Trade Finder and the further development, because what we want to achieve is to give first of all to develop a tool for us, and when it works for us, we can offer you a tool which might give you better ideas without disturbing your thinking and your focus and concentration when you are trading, just to show you where might the sweet spots be. And that's simply what we're trying to achieve. I said to my team, I want to be the apple of this business, just to make something beautiful, easy to understand, and easy to utilize and to work with. And if we can achieve that, that would be the biggest point, the biggest success for all of us, because when we can make money using this information, then that's the most helpful part. Okay, great. Thank you very much. Thank you very much, Eve. Thank you very much, Alexander. Argo, thank you. Bridge, I'm awaiting your email. If you want to help me to set up everything you need. Christoph, we talk. David, thank you very much to be with me. Ed, thank you. Frank, we talk. James, have a great day, and thank you very much. Kias as well. Levi, I appreciate to have you around. Appreciate to be my friend. Myron, mi možemo govoriti. Ja ne znam ako si tu ili ne, ali mi možemo govoriti. RG as well. Robert, thank you very much. Robert, the second one. Thank you very much. Srini, what's great to discuss with you. Sebastian, take care. And Tank, great to have you here again. Tom and Julas, fantastic. Thank you very much, all guys. And we will talk in December. I will send out the notes. I will send out the links. Please check that the emails are not going into your spam folder on your email program. I will send the links out, and the only point in Zoom, I will put define the dates, the times, I will schedule the time, and you have to you must register for this event in December, but that's only for me to control who will attend. That's everything. Yeah. Okay, have a great life, enjoy, and if you have some questions or further questions, ideas, drop me an email. I'm around the next days. I'm traveling next week, and I have a next German seminar, but then I hope to finish my seminar career and go and concentrate on trading. Thank you very much, ladies and gentlemen, and we meet very, very soon. Take care. Bye-bye.